Bam bam bam. I'm starting streaming. If you're watching this, it's cause you've tuned in at the very start. I'm Rocky Outcrop. This is me setting up my live stream. I'm not very experienced when it comes to these live stream things, so if this is showing up and you're seeing this, well then, cool, excellent. Let's get this show on the road, shall we? It says privacy up there. Want to edit it and make it so it's public. I don't know how to do that, so let me just see if I can. Upload thumbnail, category, visibility. Oh, visibility, public. So here we go. I don't know why I seem to be having to do this. Maybe I'm supposed to set this up in advance. That would make sense. That would probably make sense. Well, I don't have a thumbnail either. Shall I make a thumbnail real quick? Let me just Google up a Bitcoin live thumbnail. Let me see if I can just get something that'll do. Bitcoin continues to, let me just images. But then I don't want copyright. I'll go to Unsplash. Let me see, Unsplash. And I'll search for, Bitcoin. I'll spell it properly. Bitcoin. Great. There we go. Maybe that looks more live though. I'll go with this picture. Back on the live stream channel. Okay, so currently live. Am I live? I think I'm live and I think it's public. And let me just get a thumbnail then. Downloads, desktop. Actually cancel. I'll make it in Photoshop real quick. Are you there? Let me know if you're there. Certainly trying it. Just waiting to see if it's working or not. I don't know if it is or not. Okay, let's see. Right, so nobody in Discord says, somebody says there's one current viewer, so I wonder if that's me though. Average watch time 1 minute 48, so maybe that's a real person. I've changed it, I've got a thumbnail and everything. Monetization on, sure, totally. Stick that on, why not? Get the pennies. So right, great, okay. I don't know. Right. Oh, somebody's watching. Yeah, Mr. Reed. Hello, Mr. Reed. So somebody has found the channel. Excellent. Share a link. Great. Share a link. Oh, he's sharing a link. Oh, wow. Wonderful. Excellent. Great. Nice one. I can go back to the show. Excellent. Let me know, Mr. Reed, if the volume is correct. Excellent. That's exciting times. So for some reason, I got messages there from people as well on my phone telling me that the YouTube itself isn't pushing this stream to people. So you're my only people here. So if people can't find it, then people can't find it. But at least some people can. And there's a link in the Discord now for the group. That's fantastic. Right, cool. Excellent. let me just jump back up to the weekly time frame here and introduce the episode, shall I? I guess if I publish this afterwards, I can edit out that chunk at the start where we're not talking. So just do it. So do it like there's been nothing so far. So for the edit, I don't know. Anyway, hope you are both doing well, the people who are watching, and I'll catch up with you in the Discord after, during it. In fact, you can send messages through. In fact, if you send a message, I'll hear it go bidding, and I'll open up the screen and see what it says. Cool. So, right. Hello, I'm Rocky Outcrop. This is Bitcoin and Ethereum Technical Analysis Live. And actually, I think I'll look at Chainlink and Tezos as well during this episode. Thank you so much for joining me. I really do appreciate it. We have a bit of a story to take a look at today in today's show. And it's going to be a question of whether or not we're able to push past these levels that we're at right now to go up higher and take out some higher targets and avoid having divergence on the go, or whether or not we see a pullback from this area and therefore would there be bearish divergence at the same time as a result of that. Well, let's do that then, and let's start off here on the weekly time frame. And this is kind of where we get cheers, it's all go away. The notifications, all these noises will keep coming through in the stream. I apologize for that. Yeah, cool. So anyway, we're going to start off here and put things into context by just looking at this parallel channel real quick. And as you can see, the prices are up here at the very top end of it and pushing up a little bit above the boundary for it. As you can see, we've done that in the past, and obviously this could be positioned slightly differently and whatever else, and we'd have done that several times. The question really isn't about this precise line as much as it's about this zone here. Would we see a turnaround from it or not? Just anywhere projecting up this area, would we see one or not from here? And if this did turn into a wick and pull down the way, how would that look on the oscillators and whatnot down below? And indeed, if we pushed on past it, how would that look on the oscillators down below? And there's an easy way to frame this whole discussion really today for us. Actually, let me just real quick before I get into the nitty gritty. Oh, great, cool. So trade buttons there. High trade button 13,750, and then jump into the Discord. Excellent. Oh wow, a bunch of these things. That's great. Fantastic. Right, cool, excellent. So now here we go. Right, so the way to frame this is quite easy, really, and it doesn't take much of an understanding, really, in terms of how all this works to follow along with it. So if you're not familiar with divergence or whatever else, then you can watch my video on the education playlist, which explains it all anyway for you. But let me just really briefly say what divergence is. And divergence is whenever you see some action on the price action on the candles on the chart itself, which isn't seen below here in these oscillators. Now this oscillator is derived from the information from those candles on the price chart, so you would expect them to match up more or less, since it's the same basis for what this calculation to come up with these numbers are. It comes from the prices. So, you know, that's where the divergence aspect comes in at. Now, if I just draw a line across here, you can see that from the previous high there on the 10th of August up to where we are currently, that we're actually above that area. So you could say that there's not divergence there. And in fact, the terminology, the taxonomy for that is convergent with the price, which is obviously, you know, that's I don't know about the use of that word. Anyway, you can see here the prices are higher than they were on the 10th of August or whatever, and they're higher on the RSI. So that's convergence for us, right? Actually, for this episode, what we'll be looking at as well will be Ethereum as well. So how about I introduce what the idea of divergence was right from the very, very, very start when people started talking about this. Okay, so there was a guy called Dow back in the day, and I've made several jokes about him. I called him various different names in the past. But anyway, this guy here, Dow, was smart, and he had several ideas about trading, and he released them in little articles that he would write from time to time. And then people then came along there afterwards and put it all together and came up with this thing called Dow theory. Dow theory, Mr. Dow himself didn't say, I have a theory and I call it Dow theory. That was given to him by everybody else. And what he did was he says that there's this idea that when you're looking at a market, say it's a train company, because this is the sort of thing that they looked at back in the day in America. So say it's some railway that you're looking at, and you see that its stock is performing very well, but the other railroad companies in America are performing very, very badly. Then you would say that there was some divergence between those two between the two companies within that industry sector. That was the first idea for where divergence came around from, by the way. And we'll be using a little bit of that technique as we look at the Ethereum prices and whatnot during this show. But anyway, in divergence, what we're talking about in this modern era is whenever these oscillators down below don't match up with the prices up above. And from a weekly point of view here, we can see that the anchor point on this week is just there where this line crosses. So the way that this thing works is that you'll have data coming in, and these could all just be points, you know, and they're connected up with a line between them. So this is taken from the close of every week. So this last week closed just here, where I put that green smudge, and next week then could close anywhere. Currently it looks like, or this week that we're in, looks like it wants to close here, but of course it could close up here, it could close down here, or whatever. It's going to be on this line that it closes, you know, in this area that it closes, just about what height it closes at. Therefore, if we see a close of the week actually end up down here, then the RSI will just come down, and this little bit that's poking up top at the minute would no longer be poking up top at the minute, and therefore you would be looking at this and saying, oh my goodness, there's actually divergence here in the weekly time frame. This is why this price point at this particular time is crucial. You know, I could have done chat like this last week during last week's one, but then what would have been the point? It doesn't make any sense. And then if we look at the price action itself, then you can see that around about this area is far less crucial than this area up here for various different reasons. So there we understand that the parallel channel has a basis for being there, and that this chat here has a basis which will impact across the all of the time frames, you know, really, here with a really significant starting point on the week. But let's just move down the time frames now that we've got the idea in place that if the prices close, you know, where they are right now on Sunday night on the spot prices, there won't be that divergence. If they were to close below 13,300 or so, then there could be that divergence. It really depends, you know, how this will all spans out. Jumping down the way then to the 3-day time frame, I'll just check the live stream thing again. Oh, cool, there's some chat in there. Excellent. Well, I'll come back. Chat away. Feel free to chat away in there and everything. I'll come back over in a couple of minutes after I've finished, you know, talking about this little concept. See what you are all saying. Catch up with you. Have a wee chit-chat. Drink some of my juice because I've got a dry mouth. Cool. So we're on the 3-day time frame now. Just going to work down the way here, just working down the way here. We're not going to do anything too, you know, groundbreaking along the way, but let's just do this, and we can do it together. You can do it on your own screens as well if you want to, or if you're watching this on your phone and you're using your laptop, yada yada, whatever, or just chill out and watch it. By the way, the price is currently now 13,382, and I hope that you can tell from my chat that, well, of course, I'm positive and happy to see the prices and everything else, and I'm glad that there has been some volatility over the last day or so. I'm not FOMO, there's no FOMO here, there'll never be any FOMO on this channel, so you'll probably feel similar to this yourself when you're looking at it, but I bet you've got people out there in the world who are going, nah, emergency broadcast. Anyway, this isn't an emergency. This is us. We'll take our time. Everything will be fine. Looking down, 3-day time frame, then we have the same discussion on the go, right? Just bring this up full screen. You can see that the point that we're at right now is coming in equal-ish with the previous point that we were at before. In fact, you know, when I was filming this episode before, I was trying to be live half an hour ago, as you might know from the Discord, but it didn't work out. The prices here in the 3-day time frame were actually slightly above this, you know, slightly above this. It was looking like it was just not divergent. So we can say that from that information that prices above 13,450 over the period of the next 2 days, 2 days, 12 hours, as we see where our time is here, will result in their just escaping by the skin of its teeth, having divergence here on the RSI. However, prices at 13,400 come in with this divergence, class B, of course, and that is obviously then dependent on whether or not the subsequent week pulls back from there. But we can all agree, right? We all agree that prices go up and come down, and they go and they have pullbacks along the way. So when that's a given, and we understand that that's an inevitability, that we have ups in the prices that then pull back, then up and pull back, and likewise you have downs that pull back when they're going up the way, etc., whatever. That if we can agree that one of them will happen at some point, I think the ideal situation for it to happen without divergence, and for things to just kind of stair step along the way, and everything be gravy. But if they do happen with divergence, then perhaps, then people would be feeling less shocked retrospectively. They looked back and saw that it dropped over $1,000, or indeed potentially even $3,000, down towards 10,700 or something like that. That would be, less shocking if when you look back you said, well, I can see that we've got divergence there on the 4 hour, the 12 hour, the daily, the 2-day, the 3-day, the weekly, all of them, all divergent, all showing us it, all giving us warning signs. So that's what we're doing here, okay? Of course, and the whole proposition being that we're looking up towards the top side in an upward trend, and that's how we're able to do this. So this isn't me being a perma bear either. This is just me being realistic, and this is how you do trading, okay? Unlike the YouTube sort of meme land. So yeah, now we're currently below 13,388 after all that sort of chat. Take it up again, and you can see that maybe there's a tiniest more of a millimeter distance between a fraction of a millimeter distance between the top there. Who knows? Whatever. Anyway, as we can see, the same concept applies. Then, therefore, closes where we are now will be sort of Class B bullish divergence unless we pull away. The anchor point on this thing being down here where I'm pointing now on the 24th. And as you can see, that's below this little area here where we had that head and shoulders previously. This head and shoulders just here. Now, bearing in mind then as well on this viewpoint that the height here at the top comes in there on the 4th of August, and the subsequent high was on the 16th of August. And actually we know, looking at the price charts, that the actual price high itself was on the 16th of August or so, following on from that. So this was bearishly divergent in and of itself, and that does of course impact on our story somewhat, in the sense that we're looking at the price action here and dragging it over to this point. You can see that this current high is of course higher. Well, if how inconvenient. It is higher, but it's behind the price thing. You can see that there, so that we're not divergent versus the actual high on this 2-day time frame, but we're divergent versus the high that we got on the RSI, and that's the key point to be aware of. So it's the high on the RSI which is showing the divergence between those two highs, as opposed to sort of mixing and matching to find the bits which are not divergent on the specific time frame that you're looking at with regards to the price. Okay, then looking to actually just real quick check in with the Discord. Haha, a fraction of a million. Oh, haha, excellent. Somebody was, wow, it's fantastic to have people actually watching along. Yeah, so cool. Then looking down, so we've covered the 2-day and the 3-day. Let's go to the 24-hour. And the 24 hours maybe where more people are going to be kind of, curious as about how things are looking. Given that when we look at this parallel channel here, we can see just in this area that while we are in this potential emergency broadcast zone, that we have had a break out of this channel, not a break, a test out of it there on the 21st, just ever so slightly here as well on the 22nd. We didn't get one on the 23rd, but we came up and tested it on the 24th. Then on the 25th, we were up above it, back down again. And even yesterday, we were poking our heads just slightly above it in that zone yesterday at 13,234. So where we are right now, while it is, of course, into this area, which is like, oh, wow, magic. It comes with a degree of us having the t-shirt, right? We have the t-shirt. We've been there. We've done that. We've got the t-shirt. We know what this is about. So already, so yes. Cool. 24-hour time frame. Then you can see that we've got a couple of things to look at. And this is where we can kind of start to spread the story out a little bit more as well. Looking to the left in terms of the RSI. Now, of course, as well, by the way, I could be doing this looking at the stochastics and the DMI and whatnot down below as well. I'm not doing that, but you guys all know how to do that yourself. Essentially, if you can compartmentalize in your head, you've got all the Rocky Outcrop opticians know how to do everything that I'm explaining here on the other oscillators and whatever ones that they happen to use, if it's like OBV or whatever on their own charts, or the MFI or whatever you happen to use. You all know how to do this. Me giving these explanations is for the odd person who tunes in who doesn't already know that. So that's why I'm not going to do it on all three as well. So we can, you just do the story together here on this one. So the RSI here higher over in this area during this high than it was over here in this high right now. So if we were to push up, then we would need to see the prices push on up to these higher areas than this 86 point or so that we were at on the RSI in the past. In which case, that comes back to that question that we asked at the start, which you may not have been tuned in for, which was, are we going to push past these areas up to the higher targets or see a pullback from here. It's not so much whether or not we get halfway towards the higher targets or whatever. It's about, can we get up to the higher targets and stay there and, you know, move up the way and then lock these things in over the course, or will we see this happen over the course of the week? And going back down the way, we've got 2 days left on the 3-day time frame, and we have 1 day, 12 hours left on the 2-day time frame. So in terms of that, you know, they're not even ending for another whole day or two, you know, at least, and Sunday for the weekly. So this is why it gets more interesting, why things kind of spread out a wee bit once we get to the 24-hour time frame, because at least at this point now, we know that something will end. If we were to end where we are, then of course, you know, we've come up here and we've done this several times, as you can see in the recent past, and we're already doing that in terms of, you know, sustaining the prices up in this region, where we could then crack on up to those higher levels and then push past and not have divergence. So that is possible. But what we also see here is that there's the potential for us to have divergence even here on the day versus our previous day. Now this is obviously tiny stuff just in this little area alone just here, but there is the possibility for it, and a pullback down the way from 13,400 back down to the 12,000 region, of course 12,900 or whatever. We see the prices going back into the bullish control zone, out of the overbought territory as well during that. Now we've tested this a few times. There's a question to be asked in terms of, now that we've tested this a few times, has this been a rejection on our first pass with then a movement towards the top side to follow afterwards, and we've just been sort of, you know, gearing up for this, which is what it kind of could in a way look like should it turn out to be a parabolic movement towards the top side, you know, pushing past previous areas here in terms of highs without the need for a pullback, as we've seen as along the way several times anyway. That would be that sort of pure parabolic sense of things. And could we do that? Well, we could. Or, you know, of course we might not. And one immediate instance to look to would be to see whether or not we get divergence here. And just looking at the 24-hour time frame, it might be hard to see on your screens. I always get a bit confused about what I'm seeing on my screen versus what you can see on yours. But yes, you can see here that currently, you know, we'd be in for some divergence, right? As we have a high coming up here on the daily time frame, with price action being higher than it. That's just the reality that we're looking at. And that, of course, will then open up opportunities to looking down the way as well at these other smaller time frames, like the 4 hours and whatnot. Little things to note, though, just doing the analysis kind of along the way as we're here. What we see here is that the DMI is, of course, very strong. However, what we have is the waiting game begins, because what you want to look out for, of course, is when this the ADX curves around the way, having gone through both of them. So obviously we're through the pink one a long time ago, it's through the yellow one now. If we see a curve down the way, then it'll be obviously at this section here where it starts to curve down the way that we're really going to be like paying keen eyes, close eyes to it, as we saw over here. Of course, you know, started to curve down the way, la-di-da, followed through thereafter. So while it is strong, and you could make the argument for being strong in here, and it was, we were waiting at that point for this to kind of fulfill itself, and this is where we find ourselves then again right now as well. So if we did see a turnaround in price action, then of course we could see something which is obviously fairly sort of stingy in terms of people who are taking longs from this point. There's a 20% drop off the last time that we were in this sort of situation from where we are now. Now, just jumping on down the time frames, it's nice to chuck in a little bit extra of, you know, TA there. The 12-hour time frame I also thought was quite interesting, because we can see both of these scenarios at once quite clearly on this 12-hour as we look between the highs in here and the highs where we are, and the divergences that we see here, and where we see the prices having come up to so far today. So in fact, oh look, we've got a new 12-hour candle since I started filming. What time is it now? 15 minutes ago. Cool. So this is all just, this is new, so fresh. Excellent. Yeah, so you can see then that we came in here and we've locked this in there. This is historical at this point. That while we're looking obviously from the broad perspective about how this is going to pan out, we can already see here in terms of the in terms of where we are just now, that we have, yeah, I know people must watch these episodes and cringe because I don't lock things, and I'm always doing that. You must cringe. You're like, oh, lock it, Rocky. Okay, I've locked it. Um, what we're seeing is that same stuff, right? And I'll start off here just before going into talking about that divergence possibility and pointing out what we were talking about in the DMI. It's the same sort of story here. If we see this curving down the way, of course, then we can look out to how we feel about this area back over here when we saw that happen and coming in and touching off of our red line here. Now you might be wondering about the red line as well. Might as well just show that. I'm using. Oops, sorry. I'm actually set this back the other day to just use the standard line, so that's up there at 60 on my background drawings. I haven't set it to the fib numbers. It makes very little difference, really, but you might have seen them regimented. You might have wanted to know. Shall I leave it on fibs for the rest of the day? I'll leave it on fibs for the rest of the episode. It makes no difference, really. It's just stylistic stuff. Yeah, so we see this pullback, see this highs come in here. We see that it's clearly bearishly divergent compared to our previous high. If you're going to be looking at it like that, now I know that's quite rich because we're looking here and there's no real lows, along the way here. So let's just then continue this story on the way down, and we'll go to the 4-hour time frame. And this is where we start to see a different sort of picture emerge, where we can see high, low, high, higher low, higher high, higher low, higher high. We can see that, we can. And what we can see during this phase, of course, is that we've got downward movement. Now, what we have in terms of positivity is how the RSI has come down lower during these phases, which is, of course, hidden bullish divergence. And we're in an upward trend, so you might be inclined to lend more weight to that one. Now, of course, sort of the classic divergence is more powerful, typically speaking. But of course, we're in an upward trend, and you might be looking for that, and there you go, there is that, in which case that's what lends towards us being able to say, are we going to go up higher and try for these higher targets now? And that this level that we're at in and of itself is nothing more than a profit-taking level that we're at right now, but some people could be happy enough to take profit at, and it's also a low-risk management shorting area. This is the reality that we're looking at, because we have this divergence on the go, but we have this hidden bullish divergence, and we think to ourselves, maybe we will push on a little bit higher. Maybe it's premature to look at it that way, but that's what we have on the go, and of course that's visible on all of those oscillators down below. Going down to the 3-hour time frame, same story again, although what we've managed to do here is avoid the divergence. So this is the first time where we see that we've actually managed to lock in a piece with that, between this area and this area, you can say that, but actually looking back to where the previous high, we've not really actually done that quite yet. Let's just go down to 2-hour time frame so I can start. No, you can't. The 1-hour time frame, no, not really. This is where you have the real sort of then the debate kind of comes in at. We've got this little section here, not divergent. You can see here clearly divergent. Does this constitute a lower low as well along the way? If it does constitute a lower low, then over here, then you're presenting a confused story about where you're picking your highs and lows at. So just to put this into proper context, then take away those squiggles. Go back down to the 1-hour time frame again and point this out and say, well, if this was your actual last lower low and we're in a trend and we're going to be making points like this, then this is your high, then this was your next low which came in, which is higher than this one, and then this is your high. It means that this ain't nothing, sister. It ain't nothing, because you don't get a high followed by another high. You have to have a higher low in between, yada yada. Then that's where your 1, 2, 3 and 4 would be on this one, and in which case it's still divergent. So that's where we sit, that's where we find ourselves, and that's why the real question becomes, of course, can we push on or not? I think I've covered up the sort of the main chunk of the divergence chat. I'm going to jump over now to the live box, have this live thing up, read the comments, read whatever anybody's written in the Discord for now. Then I'll take a look at things like, whatever you want. In fact, you could suggest things as well, but I'll take a look at the Bitcoin CME charts, the dominance charts, the GBTC if you want. We could look at it versus GBP if you want. I never really do this, to be perfectly honest with you. The divergence is still here. It's the same. Everything's the same. But what we will be looking at afterwards is, of course, Ethereum, which has done some more interesting stuff itself recently. And I suppose I should possibly, just before kind of going over there and taking and chatting to people and taking questions or whatever else, remind folk that this was a lower low over here in a sense. It was, and this is a higher high, and what we have then at this point here is a broadening structure. And if you wanted to, you could say that there's some sort of broadening effort happening here, which obviously has got different implications. It's a different sort of rabbit hole to go down, so I'll not bother, but I'll just point that out. Okay, cool, nice one. So we have some chat. Oh, there's a guy who's got a name here, or a lady, I don't know, which I'll never be able to pronounce. If you can see this on the stream, let me know how to pronounce your name. Your wavy left, number 7, no, apostrophe number 7, Y. So we've got like a backwards R. We'll call it a backwards R, 7Y, RR7Y. Nice to meet you, my friend. Hi, Trade Spotting, 13750, here we go. Could be the case. Hi, Peter. Hello, mate. How you doing? I hope you're well. Then you've got you guys chatting amongst yourselves. That's lovely to see. The MACD is worth a look. Do you want me to put the MACD on? I could put the MACD on if you think. Cooly schmooly. MACD's pointing up, and RSI on the 4-hour is entering the bullish control zone. It is indeed. Lots of pressure, Rocky. Let's get some more likes on this. You haven't had the MACD on your charts in ages. I've not had it on for the last couple of weeks. When are you and Rocky doing a joint video? Good question, Peter. In fact, yeah, we should do a joint video. That's a good idea. Let's do one. And let me just check the Discord for any comments. Haha, a fraction is a metric hair. So is work, by the way. That's some Scottish chat for you just there. Cool. Well, there isn't any questions, which gives me a chance to have a wee drink. We're at 13,420. Actually, Peter, if you're still watching, this is that area that you thought that we would come up to back when we were over somewhere over here, right? No, over. We were talking about it in this general chunk. And the idea that you were having at the time was that we would come up towards these areas, then we could see a pullback. And we were just discussing at the time about the amount of pain that the markets would feel if we had a pullback, having done that as opposed to having done it a little bit earlier on. And we're up here now. So I think now that we're living this experience, we can tell about that pain. Anyway, if there were to be some. But I still, I mean, that's the thing, is that we're still looking at stuff and saying that it's positive, right? Is that what we're doing? Do I want to just ditch the Ichimoku cloud for now? I could look at it again. I don't really, I'm not massively enthusiastic about it. I mean, I think that there's some good stuff about the Ichimoku cloud. I think it's some real good stuff in terms of being a strategy for trading. I mean, if you want to, let me just stick this back to the standard settings. One of the reasons why I was looking at different settings, by the way, was because I wanted to think about how if there was anything else, if there's anything else that was worth looking at really on this one, because there isn't anything at the minute, to be perfectly frank with you. 26 for this, so you can see it's going to just hit default, couldn't I? Yeah, so as you can see that there was a cross, positive cross on the baseline and the conversion line way back here. At that particular point in time, the going back 26 bars, you can see that the lagging line was above the cloud, the prices were below the cloud itself, and the cross itself happened below the cloud as well, just over here, and it left for a confusing picture. But of course that would have been the long for you, whether depending on how you look at the Chiku span, you would have, you might have not taken that because of the but you maybe you would have, you probably would have, but then of course you're looking and saying that you can't long it when you're below the cloud. So it really depends. This is a confused one in terms of the Ichimoku cloud. This is the 24-hour time frame. I mean, I could look at it on various different ones, but there you go. And then we did push on past it, but there was no further crosses. So let's just say you went long at this point here or whatever. Then cool. Then you could have maybe potentially stopped if you were just taking touches on the or movement below the baseline as being your thingy. But overall, fine. There was a negative cross here, but it wasn't really a negative cross. Really, not really. It was just kind of they crossed, but whatever. And we're sat in this position now without any signals for taking trades. If you're using the Ichimoku strategy, haven't come up for quite a while. They just haven't. And then when they do come up, they'll not even come up for shorts. You're just saying to go long. If I go up to the 2-day time frame, same scenario, except you did get the signal over here, and it's not been, and we're still just in a long from that, and nothing's changed. 3-day time frame, the signal came back well, I suppose you got it again here. Suppose if that's the same thing, but anyway, nothing's really changed. Weekly time frame, same again. Signal was back in April though, so it was like a long time ago, or it wasn't really. It wasn't really. See, this is the stupid the Ichimoku strategy, as a strategy in and of itself is like I don't like it. I don't like it. I can see how it works, right? Because there's so many. I can see how it works, and the main advantage of this thing, by the way, is that it gives you this quick glance at the charts, so you can go through all the different things that you trade and then choose which one looks like the best one for you on a given thing that you're looking at. Yeah, I don't know. I mean, like maybe if we see a pullback down here past 13,000 here on the 12-hour time frame, we'll actually be moving down past this point now. I suppose that's the interesting thing to point out is that if we go back in terms of the 12-hour time frame, 1, 2, 3, 4, 5, 6, 7, 8, 9, 9. Have I got this set up right? Did I put it to 9? Yeah. No, 9. Whoops, that was the. I wasn't even looking at the. Oh, how embarrassing! I did all that live too. Wasn't even looking. I was confused. The 10 period moving average, exponential moving average for the conversion line. How embarrassing! How embarrassing! Well, look. In fact, actually, it's not though, because the point I was making still stands. Confused story. No signals to trade. Whatever. Since back ages ago, that's fine. Just living with it. You might have stopped out had you gone down past the conversion line. That's going to happen again. If there's any sorts of pullbacks, and then we'll be asking about questions, bigger movements down the way thereafter. 24-hour time frame. Yeah, there wasn't a cross here like I was actually thought there was over here. That's where the cross did happen. Yeah, everything I said is actually correct. Just using the wrong stuff for it. Whatever. Live stream again. Hi. All right, Tony. Good to see you. Let's see what everybody's saying. Hey family, hey yeah man. Yesterday was a little pain prick, but in my opinion a nice buying opportunity. Yeah, it was a decent pullback. Alright Simon, nice to see you. Hope you're doing well, by the way, my friend. Oh, and by the way, you asked me to give you my feedback on that book. What's the guy called who wrote it? Can't remember what it's called. Peak. I spoke about it a couple of times in Discord and whatever else. I think it's a really good book. I'd recommend everybody to read it. Really, it's entertaining as well as the way it's written, and it's interesting just to know that you're how malleable the brain is. And of course, this sort of activity that we're doing here with trading and everything is the ideal sort of use case for it. I think as well in terms of like telling yourself, believing that of course that you can essentially get as good as any human being born is at this sort of thing. Right. The PA took the price action took a play out. Now that we're here, it's time to manage this accordingly. Yes, that's right, Peter. Now that we're here, it's time to manage it accordingly. That's exactly right. Did I get a wee ding dong in here as well? No, I didn't. All good. Right. Cool. Nice one. So I mean, I have mostly looked at what I wanted to look at in terms of the Bitcoin pricing, and I'm going to go and look at Ethereum and stuff as well in a second. There's no real crying out for demand for me to look at the CBTCs or anything like that, or GBTCs or CMEs or anything like that right now, I don't think, but I will perhaps if people want. I'm actually looking at the CME chart just now. 12,700, an important number. Starting to see some wicks kind of having gone down towards that area. See this previous wick came up towards that area as well. So obviously this is going to be an important area for us should we actually see a pullback. 12,700. I think that feels about right as well in terms of things. If you had a $700 pullback right now, that might be enough to let these things cool off and find support and then move towards the top side thereafter, which is what Peter was essentially saying when he talks about buying opportunities. That's one other sort of mode of thinking to come to the same sort of conclusion. Let me look here at Ethereum then, and I'll keep the Ichimoku cloud on for just now, just as we look at this thing. I think because this here does say a story, so I don't have to speak quite so much, which is rare for me. So that's that story there, and I think I'll take a look and I'll put the MACD back on the charts then as well for us, and do a couple other little things I haven't done. What we see here, by the way, 24-hour time frame, Stochastics pointing down. They're bearishly stanced currently speaking. We've had this previous high come in versus our other high high here versus this other high, that was bearishly divergent. The RSI is not divergent on this time frame. It's not got hidden bullish divergence either between our between what we've just done yesterday and today. But overall, this was essentially what we were talking about. We were talking about this for ages on the run up to it. What did we say? Prices were in and around about these areas here. Oh, I forgot, when I draw on things, it all gets messy. I'll just not bother drawing on it instead and point instead. Prices were in and around about here. We're talking about it saying, I think Peter put a comment on one of the YouTube videos saying I'm bullish above 394 or something like that. Then what we see is that the prices came up, tried around those areas, giving you various different scalp trades or whatever you wanted along the way. You've plenty of different ways to play this. But then of course it came up to the 394 area, pushed on up and went straight up to our target of 420 blaze it zone. I think on this chart it's a bit cleaner, so I could risk putting the drawings back on. Oh no, it's not. This is where I did all of the Ichimoku cloud stuff, so I don't have the numbers on here. Let's just go with it. And we came up towards our golden pocket zone here perfectly. Did our target, exactly what we talked about, pulled back down again. Yesterday's video where the prices are around about here when I was doing the video yesterday, saying to look out for 400. Of course, if we do go down past 400, we've got quite possibly we pull on down a bit further. But the key area is to see where we close about is 394, I said, something like that. At the end, well, 393 is where we closed that, so forgive me for getting it wrong by 30 cents or something. And then the prices have pulled back up subsequently above $400 again today. It's giving you just that perfect little trading setup, really. I mean, what we're talking about here in terms of percentages, if you've taken it from around about there up to around about the top, you got an 8% profit move. Then if you took a profit at there and you just waited, then you saw the prices retrace 7%. If you shorted it from there, you took advantage of 7%, or even up as high as 9, pretty much, depending on where you would have got in and out at. And then say that you decided that you had done that and that you were going to then relinquish it when it got back to 394. Just thinking if it goes above 394, like Rocky said, or whatever, then I'll just ditch that and take profit on my thingy. Then where you've seen it come up since is another 3%. So like handy. If we see the prices continue on down the way, what they're doing is they're going into this cloud area. But yeah, sure, really what we're looking for at this stage is whether or not we stay above the latest sort of Fibonacci 236 area, and that now comes in at 396, having risen up to those areas before. So let's call it that. And that'll just do for us. I mean, what do we really want to? What do we want to lean on? The reason why this chart is so messy at the minute, two reasons. I'm going to get rid of the Ichimoku now. Actually, screw it. Bye. The reason why this chart is so messy, a couple of reasons is all the reasons are because of confluence, right? If these things are all spread out dead easy and you didn't see any of them and you could see all of them dead easy individually, like you could see these three lines all dead easy and individual because there's like no confluence between them. The reason it's messy is because there's all these lines that are showing us confluence, right? So that's where the mess comes from. So do I want to say 396 or do I just call it where we had the top of our ascending triangle beforehand, there that blue line is, or do we just say $400 where we have our 50% retrace line, or do we talk about $400 from way back when we put it on here as a support and resistance looking back in the past, or do we just talk about it because it's a round number, or what do we talk about it as? So there's like bucket loads of stuff there. The fact is, if we move above our previous closes over here on the 24-hour time frame at 415 and get a close up there, then we can say that what we've been doing is stair stepping up the way. We have divergence here on the stochastics, not on the RSI, but there is over here on there isn't on the, well, there is between the sort of this high in September and where we are just now, but we'll not get too bogged down in that. That's the same story, by the way, that we were putting out before. But the reason why we're able to draw a contrast, and this is what I was talking about with Dow Jones, and this is what it comes back to, is the fact that we simply haven't gone higher than we were on September the 1st over here. So we're not going to get too bogged down looking at that. We haven't got divergence between our latest highs on the way up. What we do have is this the DMI kind of wanting to come back down a wee bit here at the minute, and that's not positive, super positive to see. We'd rather have seen this kind of go up towards the top side and just be, kind of just push on up the way, going nice and blue and towards the ceiling. Of course, it could still do that. That would go hand in hand most likely with a further move towards the top side. But I heard you say something there about about this high being lower than this high, and that going back to what we were talking about earlier on in this video. Was that, Rocky? I hear you asking in the live chat. Lol. Of course. Oh, Anders Ericsson, Peak. There you go, everybody. That's the book. Thanks very much for that, Simon. Yes. So anyway, like nobody was actually asking what you talk about, Rocky. Of course, you've got solid faith in me. You know that I'll make it there in the end. Well, what I was talking about was how Dow himself was saying back in the day about divergence between different markets and different railroad things. Could I just Google it and get someone to explain it? It's probably on his Wikipedia page, that sort of crap. But essentially what we're seeing here is a difference in the movements between Ethereum and Bitcoin. And of course, this is demonstrated perfectly on the Ethereum Bitcoin chart itself. So we'll just get over there in a minute. But what we're seeing here is that this high's come up just to here, whereas our highs last month-ish were up here at 477 bucks. In fact, you'll remember that we came really, right up to the $500 area and then pulled back from there. And what we see so far is that the prices have only really come up as high as the 618 Fibonacci retracement that I spoke about earlier on at that 420 blaze at target. Now, that obviously becomes more significant in a sense when you're looking at this and you're saying, hey, look, this is a great target to have in mind off of a retracement against this price action here. So we've only come up as high as that, and then that, of course, that leaves you with a bigger picture of being able to say, well, hey, if we get something like that happen, then we have a high, a low, and a lower high, and then the potential for a lower low thereafter. That's what that's saying to you, is the potential here on this 3-day time frame going from our last, let's just do this comparison wise, our last high to low to high, that's the last three, and then where the next one would naturally, you just guess if you just took the last three, where would the next one be at? Then you go over to Bitcoin and you say, let's take the last three, and you've got what you have is this, and this. Right? Okay, so at the minute, what you're looking for, just in general sense, after we've finished doing this, would be a higher low, right? A higher low. So you have 1, 2, 3, and you're looking for a higher low. Over here on Ethereum, what you're looking for at this point is a lower low. And it's not. That's it. That's all that point needs to go as far as to say, because that's all that is. That's all that was. But I think that just acknowledging that the overall industry mood is interesting, and I think that it's visible in a sense in some of these analog things that we can look at from how far we've come over the last few months. So I'll go over to look at the Ethereum Bitcoin prices in a minute, but just here looking at this, is anybody still actually watching this? 11 people. Great. By the way, you are all wonderful. So 11 people. Yeah, nice one. I'm super pleased with that, by the way. So what we can see is the difference in this, to draw that analogy out a little bit further, let's look, for instance, over here at a broad picture, just get rid of all the drawings so you don't need to be distracted by it, of something like Tezos versus Bitcoin, right? Just Tezos versus Bitcoin and Tezos versus dollars, and for a brief moment here before looking up to the other ones. So before looking to Ethereum, Bitcoin, and what you can see here is that there's a major low here and a major low where we are just now. And this could turn around for two reasons. One is that the price of Bitcoin were to drop down, right? So then, and this just stayed more or less the same versus the dollars. That's going to push the price of this up. Or the price of Bitcoin does whatever it wants, but whatever it wants is less than the movements that we have to the positive side here or the dollars. And then that would drag this towards the top side. Now, positive movements for Tezos versus the dollar, which are less positive than the Bitcoin ones versus the dollar, are going to see this continue to go down towards the downside. And of course, then the negative scenario of just, Bitcoin being positive and the dollar price here being negative are going to see this move rapidly down towards the downside. But we do have this area over here to be aware of, just this general low here, and where you can see the prices coming down to, and this being the price action over the last 6 months, year, pretty much 10 months, whatever, some 8 months of price action in here. And it kind of shows you that story in the same sort of a sense that if they were to see some sort of sudden and powerful movement what this would do is return this back into normality for where it's been for the last 6 months. So, if we were to see a big dramatic pullback in the Bitcoin price, then of course this would just kind of look more or less natural. But the Bitcoin price isn't telling us that it's definitely going to do that. Certainly not yet. Not the way it looks right now. It's not saying that it's definitely going to do that. But this story here, this sort of the feeling of the market could maybe be summed up there when you see that versus how you see the price action over here with the regards to how we've got this, we had a little low coming, a low here coming in, followed by this positive price action there afterwards, which has got higher highs and higher lows along the way, kind of for it so far, managing to more or less maintain itself above the key areas that we need to see having happened here. Where's my Fibonacci retracements, for instance? Just more or less staying above this $2.11 area ish. And struggling in and around that area, it's not doing that catastrophic fall that Ethereum or that Bitcoin has demonstrated on the Bitcoin Tezos pair, which gives you to that point where if you were looking at it and saying, well, let's just imagine this was an inverted cup with handle type of scenario or something like that, completely inverted. Here's your handle, here's your cup, and then off you go to the races. Completely inverted, left to right, back to front, upside down, everything. But just essentially the double bottom type scenario playing out here, and movement towards the top side. Or you could flip reverse this chart, do -1 up there, and be saying, well, hey, look at this. This is positive. We have an actual sort of cup with handle potential here. Maybe we'll see the handle retrace 50%, and then we'll blast off towards the top side, etc., etc. So then, if that were to happen and this were to retrace 50%, then you're looking at the prices going from 1580 up to somewhere 27,000 or something like that. And would we really see that happen? I mean, are we going to see a double? Are we going to see a double in the price against the dollar to sort of initiate that to happen, or whatever? Are we going to see it going from $2 up to $4? To make that happen. Well, it's potential. It's potential for this. Looking at this high, higher low, higher high, higher low, higher high. If we were to do it, big movements up, they have happened quite quickly. It has happened. We can also see how that could happen with the Bitcoin case. So we're just staying aware of that. Let's look at Ethereum versus Bitcoin. Then I'll jump back over to the chat. If you've got any questions or anything for me, anything you'd like me to look at or whatever, then stick it in there. What we were waiting for in terms of this Bitcoin Ethereum thing, I should really point out first of all on this nice and clean and empty chart, is that we were talking here for quite a while about how there was going to be some sort of volatility coming back into the markets. And when the musical chairs stop, then to be aware of it, and just so you can see. Now, this isn't some sort of make you tons of money indicator thing, right? But this is just something that we can see. I programmed this thing to have this background somewhere over here. I don't really know, before this started showing up anyway. And it's not, and I didn't come up with the maths for this or anything. This is just, this is just something. Well, I did kind of, but This is something that's kind of known. We've seen this have an effect in the past, and I'm talking about volatility here. Not that we're going to see necessarily the prices move one way or another, but we're going to see the volatility come in. And if we look towards where the end of this stopped in April, it stopped, it dropped, it went back up to where it was before. Then it ended again in April. We had another brief moment of it. It stopped, it dropped down, it went back up to where it was before. So we had full volatility with like big moves happening. So what we've had recently is that it stopped here, it dropped, it came down, it went back up to where it was before, and now what we've got here then there afterwards is this follow through thereafter. And where we see the prices right now is right down at the bottom end of this wedge again, giving us this potential for this final touch. Obviously the subjective nature of this thing, it could be more or less anywhere, whatever, who cares, there it is there. And as you can tell, I'm not the type to panic too much whenever something sticks its head past a wedge, not immediately, not unless I've got some other reason for it. What we see as well is we're below this neckline area, so we have a couple of targets in mind if we were to drop down the way or go up the way as well. But what we see in terms of the volatility in the background here is that we had that happen, and there we go. So if we see this box appearing anywhere, then maybe we need to be aware of the fact that we could maybe see the prices go, a little bit doolally for a wee bit, and then potentially even return to where they were before. Or of course, push on past boundaries. It could be that it just simply pushes past a boundary, or a trend reverses, or whatever. If we want to look at this and say that there's a measured move on the back of this wedge, for instance, and that were to take us down towards the downside, then of course we could do that, and that ends up taking us down towards 23. If you wanted to say that there was a measured move off the back of this head and shoulders, then we could do that, stick it down into the box area, take it off the box, that takes us down to 21. If I didn't really mess around with it too much, then these two things would be more or less the same. So a failure in terms of the rising wedge is going to be like the measured move off of the head and shoulders, more or less kind of both of them aiming down in terms of where's the realistic point for a turnaround to happen at, in around this 24 area, 24, 25 would be the reasonable profit taking zone. Of course, you could also be judicious on things and take profit earlier at this 50% zone, and I would say that that would be a nice enough fake out area for us if we were looking for a measured move off of this thing, and we only saw the prices come down as far as this. Then of course there you've got to be aware of this would be your sort of fake out zones for us just on this one. Of course, movements above this zone here, really, that would be your fake out zone there before you take out that previous high, move past that sector where we had the volatility, and move up past the 382 and the neckline territory on this one. But you can see this is pushed down the way, so we've had this downward movement, and then the run up to this beforehand, what was the movements like? And if we just go back over to the area over here in January, so the start of the year, we can see that we've really, since the start, in fact you can use the boxes that are probably positioned behind my head to show us that since the start of the year we've had an 11% increase in the Ethereum pricing versus Bitcoin. Since March, yes, March had this low, pushed up, came down, pushed up. So this overall rise up from the sort of March to August territory, could say that we saw like with Bitcoin, March to August, and that we saw with Ethereum, March to August to September. Looks in terms of the comparison here that we also had this upward trend in the Bitcoin, the Ethereum Bitcoin pair, and that this was doing better than it, and the overall market was increasing and getting better and stronger and everything else. Whereas since the highs that we've had in September, we've seen a diminishing aspect with regards to Ethereum versus Bitcoin. So the Ethereum value has dropped relative to the Bitcoin value since that period in time, and that speaks towards the overall industry slightly as well. And that of course comes back into view here on the Bitcoin dominance chart, where we've seen the prices move on up and up and up and up and come towards the top end of our wedge here yet again on the dominance chart. Now, will we see a pullback from this wedge area on the dominance chart? In which case, you could see an increase in the price of Ethereum relative to the price of Bitcoin, or you could see a drop of the price of Ethereum, which is less than the drop of Bitcoin. So just to be aware of the fact that there's this dynamic here, because the price of Bitcoin is diminished relative to the price, because the price of Ethereum is diminished relative to the price of Bitcoin, and we can see this in terms of the charts here, that we've still not made our higher high over there, and we're still actually being sort of, in and around about the 50% zone of the $400 area, which on the Ichimoku cloud is in around about this pattern, yada yada yada. We're still not higher over there. That overall the crypto market cap has seen that the price of Bitcoin is taking on dominance from it, and that if there were to be a pullback in things, that the pullback that could happen here in Ethereum could be less than the pullback that happens in Bitcoin, and remain within this overall structure up the top here. Or it couldn't. You know what? There's something else, by the way, that I've just thought of looking at this thing that I never ever think to talk about. So just stick this on real quick, so that you can see if that were to be the case, then what people would look at afterwards is they would say that this is what has happened with regards to the price, just so you can see this yourself, like just so you know in advance if this were to happen. Then they would say that we had a diamond top over here on the Ethereum pricing, and that we had this head and shoulders movement, also this sort of Wyckoff distribution top area, and all the rest of it happening on the Bitcoin Ethereum one. And then perhaps we see a positive wedge play out here, and the prices of Ethereum go up versus the prices of Bitcoin at the same time as where you see the Bitcoin dominance chart drop back down within this wedge, which of course is a bearish pattern, but we've come up towards areas which are now worth looking at and saying, if we push outside this zone, of course, then maybe we do get a measured move off the back of this and go on up, and Bitcoin just tears the market to pieces. Because look, if we go past this zone, you know, on this wedge where we've had a few touches already, then maybe we break it out towards the top side, and that's your positive case scenario in terms of the Bitcoin pricing. But in terms of the negative case scenario for the Bitcoin pricing and getting a clue of this earlier in terms of the market, well, there's no way on earth you could draw a diamond top in on the Ethereum, on the Bitcoin pricing, that is theoretically possible to draw one in and around about this here on the Bitcoin pairing. So anyway, that might be of interest to people. Early DMI on Ethereum does suggest a good scalp, mind you. Cool, nice one. Let me just read back a wee bit and check. Great recommendation, Simon. Yes, it was. We hear Southside Playa. Nice to have you here, matey. Good answer to the person asking how is now a good time to get into Ethereum. Yeah, there we go. Cheers for that. Harsh, hi Rocky. Hi Harsh, mate. Good to see you. Not seeing massive uptake in my videos on LBRY, despite using those what you call them, tags that you suggested, but who cares about that? I'm actually just noticing here, looking at myself on the camera, that I have right in front of my face the Rocky Outcrop logo thing. It should be more over here or something like that. Oh well, there you go. There you go. You can just stick me up here for now instead. How about that? There's the new style that Rocky found. What do you think of that? So yeah, let me just jump over to the Discord, see if there's any chat in here from anybody. No, there's not that I can see just now. Oh, that my video got published in the thingy here. That's cool. It's good to know people can see that. So yeah, I'll just chill out here for a minute and see if there's anything anybody wants to be chatting about. Maybe I could get this as a pop-up. The logo what you're talking about was only on your little window there, not on our view. Oh, thanks for that. Cheers, man. I really appreciate that, Jimmy. Wonder why it's on my one and not on your one. Though it's a bit weird that it's on that. Yeah, anybody wanting to look at anything specific? I mean, I've not looked at Chainlink and I've not looked at Tezos just yet, and I'll look at them in a minute. Well, I have looked at Tezos, haven't I? I'll look at them in a minute. I don't reckon I'll do individual videos today because of what we're doing here. But I could. If I do, draw some fib extensions. Draw some fib extensions. Alright. Not on this thing though. Should we go? Do you care about where? Do you want to see it on Bitcoin? Is that what you were meaning? I'll come back to that in a second. I'll assume that you meant it on Bitcoin anyway, but I'll just take a look at Chainlink real quick in case people have tuned in to see that. I think I did write it in the title of this video after all, didn't I? People have been asking me in the comments and stuff like that and privately whether or not this is negative and things like that recently, and I did point out in yesterday's video, but I'll do it again, that of course while this has got a downward slope on it, it doesn't mean it's negative. It's just areas to look out for in terms of resistance and whatnot. As you can see here, the lower end of the pitchfork yet again operating perfectly in terms of support and resistance for us, coming down towards the lower end of our wedgie thing here. Do we have this positioned ever so slightly wrong on the things? Should it be like that? I don't know. I don't really care. As you know, I don't like to pretend that anybody draws these things in perfectly. I certainly don't enable other people to continue that myth. So looking here, the next targets towards the downside, if we did have one, would be 83. Target towards the top side, 98. Looking here at 90,000 Satoshis. Although this isn't a massive shape here, you're still talking about the guts of 10% down towards the downside, the guts of 10% towards the upside. Huge amounts of trading to be done here without any real need to be particularly worried. Of course, the key area for taking profits and then looking for support and resistance will always remain in there at that 93k area where we've seen things going along before. How is the shape of all of this looking here with regards to the Fibonacci's? And what if we were to take a trend-based Fibonacci extension? Now, when people say Fibonacci extensions, they often mean different things. So if you were to take one from this and say this was as much as the rise up as we were ever going to get, then what targets would we be looking at for the downside movement beyond this zone here if we were to continue a downward trend? Now, I'm allowed to say all this, having already said at the start that this isn't negative, this isn't all inherently negative, and these are the targets got to take it towards the top side, yada yada, so I'm allowed to. Anyway, this is fib extensions. If you want to use fib extensions, this is how you use them. There's a couple of other things that people talk about when they talk about fib extensions, such as these numbers down here, like 1.272, when you've gone beyond the 100% range of a regular Fibonacci drawing, then of course then you can call this an extension of it. A lot of people do. This is yet another term from the world of trading, which has been badly chosen by the masters of the taxonomy out there. I can't imagine who it was that wrote all the textbooks and whatever for it, and everything, and came up with the names of these things. Anyway, this is Fibonacci extension tool here specifically, and if we were to get a pull on down the way after this here, then we're looking down towards that 43k area, which is actually pushing down beyond our white line. Of course, the shallowest area for that would be 65,970, but we could be looking down at 54,584 as well, which is right on our white line as well, pushing down past it. Then, of course, if you were to sort of then turn around at that point, be looking for 43 to be important down there. Just thought I'd chuck that out there since you did say Fibonacci extensions. Let's do the same thing, but take it up towards where we have our high over here on the dollar pricing. Bearing in mind that our high on the Bitcoin pricing was this initial one right away, and since then we've been consolidating with lower highs and higher lows. And over here, and then up towards our top area, then you can see that the 618 comes in here, lines up with our 786. That's of course down there at $5.32, and at the very low end of the of this channel, should we come back down into that area and whatever else. So it's a huge move away from where we are just now. But in terms of realistic, within the realms of possibility, things that could take us down to that area, well, we have this measured move that would go down there. Then of course you've got the channel itself, but we're pretty close to it at this point. Now the channel is pretty much BS at this point. In fact, I'm going to just remove it so I don't find myself talking about it again in the future. And yeah, so that's what we're looking at. But I'd rather see this break out towards the top side. Statistically more likely to break towards the downside if we call it a wedge, which we could just about, but we're going to call it a channel. Let me just drag this down a bit, drag this up a bit here. Yeah, that's more channely. Perfect. Nice one. Thank you, Subjective World. And it allows us to continue to look towards our targets, such as the 618 golden pocket zone there at 1560. If we see the RSI doing what it's continued to do, as in put in highs without being variously divergent, which is nice to see, put in lows with the occasional drop of hidden bearish divergence if we want, or hidden bullish divergence. So there isn't any just there, actually, as it happens. Well, that would be acceptable as well. And then we can move towards the top side. Let's just jump back over to Bitcoin though. Well, let's link Ethereum first. How are you doing, Link Ethereum? Did our thingy came up, hit off of our area up here, move towards the downside? I don't know, everything looks like we've already covered that in yesterday's episode and everything all perfectly. Still just going along fine. As you can see here, we've got this triangle shape. We tested outside of it, came back in. The question remains, as it would have done in the previous episodes. So naturally, there's that. Let's look at some of this then and ask the question. Now, we've already done this twice on the other chart, so it should be of no surprise to people when you see me drawing it in like this and seeing where we could come down to if we were to see a pullback on the charts then at this point here. And what have we talked about in terms of pullbacks, potential pullbacks? Now, this is what we're just looking at the minute. We're not looking at upward side targets at the minute, okay? We're not doing that just now. Instead, we're talking about potential for pullbacks if we don't push on past this zone. Do people want to look at upward side targets? Let me know in the box if you want to look at upward side targets, right? Just let me know. But what do we see here is we see this lines up perfectly, the golden pocket coming in right in here with our fuzzy line right in the middle of where those, or of the 50%, sorry, that's not the golden pocket, the 50% to 618 Fibonacci retracement area, but 618 coming in right here at this line, and of course the golden pocket ishness will be in here, and that lines up with the median line of that channel if we were to do something like that. Now, of course, that would obviously, first thing you'd be looking for would be a pullback down below 13,250. Obviously, given where we are right now, that'd be your first thing, because that means you're back inside the channel. So there's one of those things, and then let's do one the other way around. Shall we take it from this low over here to this high here and down to this area here? And it won't be much of a surprise to see that the prices have come in here at the 786. But if I just wiggle this around a bit and give me another one, matey, 0.886. Then you'll not be surprised at all to see that the target here, 13,646, if we were to continue to go towards the top side for a potential move around, that comes within the scope of all of this and the divergence and everything else we talked about. It's just $200 up from where we are just now. That would be where the 886 is. We've pushed past the 786 over here with regards to that. This obviously changes around quite a bit depending on where you choose your starting point from. If I just did it bodies wise, because that's a body up there, and did it body to body instead, then you can see that the 886 comes in just at where we've already been, really 13,500, 13,498, 886 Fibonacci retracement point there. And then of course since we've got this on here, we might as well just line this up so you can see where then the extensions come in at. So the 1618 comes in there, up there at the number 1 on the Fibonacci extension, and there I think is kind of like the understanding of how these things fit together for people. If you need to, if you want to know like why these numbers are up here and what they kind of tie in with, then there's the 1618. Do we want to put anything else on here like the 1272 and the 1414? Just so you can see how these line up. Oh, look at that. That lines up with the 886. Oh, look at that. That lines up with the 786. So if you've ever wondered how to use the Fibonacci extension tool, what the point of it is, and how to do it all, there you go. That's the point of it. That's the significance of the 1618 as well on this movement down here, is obviously on the trend-based thingy as well. And as you can see, as I was using the trend-based guy, as I was using this, that the points... Oops, that's time. Whoops, that's the wrong one. Should we do one of them in a second as well, actually? Let's do one of them in a second. Then, as you can see, if I move this point here, it changes the impact of all of that. So this is why you can tell, and that's a pretty good way of doing a health check on whether or not you're looking at the right Fibonacci overall. You know, I don't ever bother doing this because I always look at the right ones anyway. But if you wanted to, if you were starting off trading and you wanted a tip and you were like, but how do I know which one's the right one to look at? Well, there's one way of doing it. There's another lesson from the world that doesn't exist inside textbooks. Your stream is more fun than videos. Is it? The live stream is more fun than videos. Thanks, Harsh. That's good to know. Draw some fib extensions on BTC as well for some potential upside targets. Just did that just there now. Obviously, very, very close to where we are. Just looking. So I'll look beyond that in a second, shall I? I'll not be too surprised if we have a 14k to 14.4k super fast wick if we bypass resistance at 13.9. Interestingly, come on, Tez. Is that? I hope. If you're saying come on, Tez, then I feel what you're saying there. By the way, Eric, Rick. I see what you're saying there. If you're saying come on, Tez, as in stop talking about Bitcoin, get on with talking about Tezos, then sure, I'll go back to that, look at that in a minute. But if you're saying come on, Tez, then yeah, I feel you. I have a speculative short in order, in around about 14,200 with a stop at 14,400. Might be nice. Yes, upside targets. I have a short at 14k as well. So people are looking at that 14k area and thinking they want to short it. That is making a lot of the senses. Let me just jump up here real quick towards the before we take a look at this fib extension stuff and whatever else. And remind me if I forget, because this is me we're talking about here. That what this was for so long, by the way. Had this on the charts for I don't know, since I started filming episodes or something. I don't know, since last year sometime. So this is I'm not sure. Anyway, long time. Peter will be able to tell us. He's watched all of them. You know, I spoke about this in yesterday's video. This is your high, your low, your high, your higher low, your higher high, etc. And this is a descending broadening wedge. And a descending broadening wedge, of course, is a continuation pattern. And why would this be a continuation pattern? Well, it'll be a continuation pattern for this trend here. And what we've seen is this happen so far. So let's just be a little bit more different, a little bit sort of like how you might see a textbook written by that Bulkowski fella when he's looking at things in terms of targets, right? Let's just do it this way, shall we? Just because this is, well, I dare say, interesting, but also because we're not FOMO free, because we are FOMO free, greed free, technical analysts, and our pants don't go on fire every time we see the prices doing something to the point where I need to spend this entire episode down here like this. Like you'll have seen in other live streams going, oh, this is what's happened. Oh, and just sitting here, oh, let's see if things go mad. Instead of doing that, right, let's just do this with the actual FOMO-free professional style technical analysis, shall we? Yay! If you were to take a move, by the way, just like this, why has the top bar disappeared? Yeah, there we go. And look at this just in terms of targets really alone in and of itself. You could, of course, be looking up towards that sort of 15,700 area, right? You could. That would be one way. And, of course, that's not the ideal way to do this, but that's one way you could maybe look at it. But what we don't like that though, because there's a couple of problems with this. What about if we were to take a movement here instead of this part of the broad end wedge, and we've already come kind of past that zone, but this is drawn in fairly subjectively. Like I say, all the episodes, this could very easily be just up there, which means that this could very much easily be just up there, which means that this could be the thing. But what is it that Bulkowski says to do in his book for ascending broadening wedges again? What is it that he says to do? Is it one of these movements down below, or is it up above? I'll have to check his textbook. He almost certainly says, as he always do, to multiply by price, reach, and target thingy and all the rest of it. So let's just do that together before we look at the other ones. Or is somebody giving me an answer? Because it goes ding dong. Somebody might have given me an answer about what they're doing. Oh, cool. We've got Peter's put a thing with his targets. Hope you don't mind me sharing that. I'll take a look at this in just a second. And this is how I'll do that, in fact, on the show as well. You're looking at the hourly just there. 13,582, 13,673, 13,804. That kind of is more or less what we were looking at before as well in terms of the shapes of things. Yeah, let's just get up the old Bulkowski broad and wedge. Ascending. Now we'll do descending. Yeah, the measure rule in this thing is a bitch. For upward breakouts, use the highest peak A in the chart as the target. For downward breakouts, compute the difference between the highest peak A and the lowest value B in the chart pattern to get the height. Multiply the height by the above percentage meeting price target and then subtract it from the lowest value to get the price target. So, if you were to do a downward breakout, you'd be looking at the difference between the highest peak A and the lowest value B in the chart pattern to get the height. Then you'd times that by the multiply the price meeting price target. Now we're not going to be doing that, but that is 83 or 32. So like an 886 or 382 Fibonacci retracement is what that adds up to. By the way, like obviously you're talking about doing up here to here, then obviously how these numbers work together. Like he's not going to specifically draw reference to the fact that that's what is, after having looked at hundreds and hundreds of these and whatever, that he's found that either it's 83 or 32, and that results in it being the 27th out of 39 or 29 out of 36 in terms of how good it is at meeting its target, because it has these two targets, and it's but the world of technical analysis almost always ties together. Anyway, obviously, so let me just draw a couple of quick points from this, right? That if A is actually the broadening wedge part, right, and you're taking it from your heights, let me just draw this over here. If this image was actually what it was, then A would be up here where we have our high at before, which ties in perfectly with Peter's 1.618. Fibonacci retracement point in there at 13,840. Of course, that comes up to that perfectly. This obviously doesn't really look really correct at that at that point because of that, but I can make it look correct. There you go. So for all of you subjectophiles out there that are saying, but Rocky, that no longer makes any sense. Well, there you go. There's your wedge. There's your price target. There it is, right there, from Bulkowski's textbook. So just to put everything into context. Yearly low. For both breakout directions, the best performing are those with breakouts within a third of the yearly low. Volume trend. Downward breakouts favour a rise in volume, and upward breakouts show better performance when volume tends downward throughout the pattern. Yeah, whatever. Done with that. So yeah, what was it that Peter put in the thingy? Because I can just copy his chat for this here. He's looking back about where that low is over there. This is the hourly contract. We're talking over there. Let's just bring up the hourly chart. Have a wee look. Let's just dive on down the way. Diving on down. So you go from there. Let me just look from this previous low. We had two lows. 1, 2, there. 1, 2, there. Yeah, that's what you're doing. Let's have a look. Let's have a look. Of course it's going to look at the same because we've got the same charts. But let's have a look. Da-dum-dum-dum. Yeah. 13,840. 13,840. Well, how did that look? 13,840 on the broad and wedge chat. 13,840. Oh, what a coincidence. What a coincidence. I think that would be a pretty reasonable target to look to. In terms of being looking at 14 and 14.2 and stuff like that, sure, it's possible. From numerous different ways of getting there, I'm sure it's possible. But none the least just coming down to using these methods that we'd already used before, like you're talking up to 14.5 if you're going around this sort of a concept. If we want to just look at it from a real crazy town concept and use numbers within this extension, then you've got the 50% comes in there at 14,000. So you've got that as well. 382's in there at 13,000. So like this sort of easy kind of chunking up system where you've got 1,000, 1,000, and 1,000 makes this fairly easy to see in terms of 3 potential targets for us. This is a little bit. This is obviously quite. This is quite a bit much, to be doing it this way. But you can see why, in some senses, that you might, you're looking at our significant low, significant high, a retracement against this high, which came in at the 236. I actually probably don't have these even positioned correctly. But it came in, it tested the 236, and then moved on up towards the top side, having whatever. It was part of our story, our shared history. So there'd be that as well. But let's just see. Maybe we satisfied that type of chat. I have a short 14K. Showed up late. I'll have to rewatch. Thanks, Rocky. Oh, cheers, Sean. It's good to see you. It's always good to have you, and all that. So you can watch it. Great. Nice one. Someone's going to rewatch the stream. This is more fun than the normal videos. Oh, great. Cheers. Thanks very much, Jimmy. David Hunsberger. Morning, y'all. What are the odds we keep bolting up? So many people are shorting at 13.8 to 14. Could it not just keep rocketing up to wipe out the shorts? Could it not just keep rocketing up to wipe out the shorts? Well, I think that does come back down to our fundamental question from the start of the episode, right? Could it not just keep rocketing up to wipe out the shorts? Yes, it could. It could. Let's do this. Let's do this. I'll hide this for now, and I'll hide my wedge. We've kind of made I think I've now fully extracted all of the value out of that wedge that you could have possibly have had for the longest time. And let's use this here measuring stick that I had before as the starting point in one of these ways of talking about it. Now, in terms of could we keep doing it? Sure, we absolutely could. One way that we could keep doing these movements is if we decided this was some sort of wedge pattern here and that we were going to break out of it in the statistically less likely way, given this is a rising wedge, and going towards the top side. This is just one answer for you, by the way, buddy. Say we were to break out of this now. Where does that take us to? 20k. That's our all-time highs up here. Is that likely to happen? Is it likely to happen? No. One way of instantly answering that question that you asked, what did you say? What are the odds? Well, less likely, because just specifically speaking, if you want to get the odds specifically. Oops, go back. I'll use the actual rising wedge. Rising wedge, let's call it that. And what are the odds? Break even failure rate 19 to 51%. So even if so if you were wanting to take a bet off the back of that, then maybe you'd be sort of 50% chance of just at least breaking even anyway on a failure. So there you go. The percentage meeting price target 63.32. This is of course the 32nd out of 39, so it's like one of the worst. 36 out of 36 in terms of ranking for its patterns. It's one of the worst ones. So often fails. Most often these things turn into channels and whatnot when they fail. By the way, I mean it's like the evolution of these things. It fails on 32 out of 39, then it becomes a different pattern, which is higher up in terms of the likelihood of it working, and that's the evolution of these things. I was kind of hoping that I would just get an easy pit to point to and say what odds were. The average distance to an upward breakout is 67%. No. Can be in any direction, but downward is 60% of the time. There you go. There's your odds for you. We'll give you odds of what's call it. How do you turn fractions into odds again? Because the 40%, the probability is 0.4. What's that then in terms of odds? I don't know. I'm not very good at that maths. You can tell me. Cool. The way I think about that is there's more liquidity in stopping out longs than pushing up and liquidating shorts. Oh yeah, for sure there is. So if a pullback seems likely, try not to double think it. Okay. Yeah, that's a good one. Thanks, Rocky. I appreciate your content. You're more than welcome, David, my friend. You've got a great name, by the way, there, Hansberger. It'd be good if you were a Rangers football supporter, by the way, for the team Rangers. Hansberger, great name for that. Did you see the goal? If you want to look up something interesting, there's a goal that they scored there to win their match in the Europa League the other day. It was absolutely phenomenal. Fantastic. Really enjoyed watching that one. And if you don't know what I'm talking about, then cool, just skip past that because who cares? Soccer. Yeah, what about then if the other sort of scenario which could potentially be negative for us, and how are we looking here with this one? Well, I have to say not looking great for it, just generally speaking, not looking great for it right now, because of where we find the prices. Now we're at this sort of 955 area. Before, if I'd done this before, then we had, just coming up to where we were here, like if I just kind of get this to be 886, there we go, 88. If we'd had it, the prices come up as high as 12,771 and then pull back from there. I think this would have been much more perfecter on this one, but we're not. Instead, we're here. If we push past that 13,850 area, then the chances of us going up increase a lot more. For instance, you've got a failed pattern over there as another degree of confluence with the long side scenario. You'd have a failed pattern. You'd have us coming in here. This is what I was talking about at the start of the show, which I want to reiterate now. The anchor point on this week's RSI is right here in line with the other with this high. Therefore, if we turn around and drop down and the prices go below sort of 13k is an easy number. I can't remember. I worked some of them out earlier on. If the prices go below this, then what you'll see is the RSI, instead of going up like it is just now there, instead of looking like that, oh, you can't see, it's in front of my drawing, whatever, then it would come down and look like that, okay? And then it would be divergence. However, you'd have, if we push on and continue on up the way, just in fact closing where we are now and then on and on and on, would mean that you wouldn't have that divergence, and instead you've just got more of this sort of this stuff up the way. I guess I've used those things there to make some other point on some other time frame, but I can just use them now to make this simple point here. And then, of course, you're still looking at a negative pattern in terms of this being wedgy, and having a pizza slice here. Then what you could see is for the prices to push on up come off the top of this thing and then pull back the way. And here we are now at 13,400, and we've come up this far. 13,800 would take us up to the top. 14,000, sure it would. But then maybe in terms of like how this would work, you'd have a pullback and it would come onto this area instead. Looking at this then at this point as being support, resistance, turn support, etc. And then maybe the broader term answer to your question was, could it not just keep rocketing up to wipe out shorts? It's like, well, it could, and it could also go up, sort of get a lot of people to come in and short it, then come down and then go up and then wipe out the shorts from there and from here, etc., etc. along the way. That could also be another possibility. You really just have to look at these things in terms of risk management. And risk management really just boils down to how your positions are and where your positions are and whatever else. And if you're trading this at the minute and you want to just go long off the back of it, well, that's no problem at all. It's really easy to manage your trades in this area. It's 13,415. Where do you think you would be wrong at if you were to see a pullback in prices? Where do you think you could be wrong from, and what would be one easy way to do that? How about we take a Fibonacci retracement from the low before we came up to this high? This is a 4-hour time frame. You could say that maybe you're wrong. Should we see the prices dropping back down below 12,947, for instance, just coming from here? Or you could indeed, take it from, say, over here at the low that we had after I've obviously got all these drawn on in various different places. You could have it from here, and you'd be looking at this, right? Now, if you were to stop out down here, though, having longed it from right now where we are, how would that look in terms of your risk management? Is this if I got long position? Yeah, so you'd be longing it here from there, right? And your reward, using it, this is in terms of risk management, right? So longing it directly from here, and saying that I'm going to stop out if the prices drop down below this price. I'm obviously doing this in quite a big way. You're talking at the minute like worse risk to you have reward ratio. Your risk to reward ratio is way off. Instead, let's just see where would you get a good risk to reward ratio, and what would be your risk to reward ratio? Well, you could be looking up to a risk to reward ratio of something like, say, 4-1, right? Say you had a risk to reward ratio of 4-1. So there's 4-1. Then you're looking for the prices to go up to 34,000. No, 3,474. Sorry, what? Yeah, no. 36. You're looking for the prices to go up to 17,000, and then pull back. Then you'd have realistic, then that you'd have a trade that's kind of worth doing, if you like. Otherwise, it's not really worth doing. So the question then kind of comes down to, well, yeah, sure, we could keep rocketing up. Do you think that we're going to go up to this point here before you would take profit on that move, though, or what are you thinking, really, overall? In terms of managing trades, though, in the opposite direction, if you were to just simply be, looking and doing the opposite from that point of view, and instead thinking, well, I'm going to manage my risk here from a short side point of view to be fairly low, and I want to be able to come in here with a 4-1 ratio instead of the ratio which I've got just there, 4-1 ratio in terms of that being your target, with a movement down towards this price here of 12,600, let's call it. And again, as well, bearing in mind that this is pushing on. This is pushing on past the small target. We're not talking about a scalp here. We're talking about this is a decent move, either way around and all the rest of it. And you wanted to have 4-1. So you wanted to have 4-1. Then an equivalent trade in terms of managing your risk would see you stopping at around about that 13,800 area. If you were to come down to try and, well, actually that's not true. You wouldn't stop at 13,800. You'd stop it at 13,700. They'd see you then coming on down to this area. So, with a 4-1 profit to loss ratio, $865 away from the price that you got in at. So you're asking the question, can the prices move up $3,700, or will they have a chance of moving down $865? And which one could happen sooner? And how would you manage your risk trading it and operating in around that area? and that's trading. What you could, and what you're doing there is essentially when you do those two little calculations, is you're looking at the inherent risk between the two different options and saying, well, I'm going to buy or sell this particular risk, And if you're looking at a risk to reward ratio of whatever, and you just trade like this, I'll stop out if it goes up to 13,000 or 14,000, and I'll take profit if it goes down to 12,600. Then you're looking at crap risk to reward ratio of 1, and you're going to lose money trading like that. Whereas if you're looking down here and you've got stops in mind and you're thinking about how you're going to manage your trades and where the key areas are, if the prices move past certain zones, then yeah, sure. And then to answer that question, if the prices did come up to 13,700, what's to stop them going up to 13,800? What's to stop them at that point to going up there? Do we think that that's a reasonable area for it to turn around? So let's just imagine that a scenario happened where you did actually stop out of a trade here at 13,700-ish, right? 13,700-ish. You had a risk to reward ratio of 4-1 because you were looking at it coming down to here. So let me just get that 4-1. God. Sorry about the time here. Well, that'll do, right? Whatever. So you've got that about 4-1, and this is what you were looking at. And you said to yourself, well, imagine that if we did go up to 13,700, what's to stop it from going up to 13,800 at that point there? Then you'd be like, well, okay, 13,800 is, what was it? We said 13,840 was what our target was. Let's stick it in around about there. 13,800 and... somewhere in there. It's too hard. I don't have the DPI on my mouse to get it to go. And you also then wanted to take a sort of 4-1 risk to reward ratio. How could you manage that trade? So I have to zoom right in for this one because we have to. That's 4-1. Okay, so let's see. Say you wanted to do that. Then you could then put in a stop. You could put in an order there to long it up to the 13,840 area with a reasonable risk to reward, saying, well, I stopped out of that trade there. I can still get 4-1 on a move up that way, and I'll put a stop loss in there at 13,650. And sure, then what could ultimately happen is that what the prices do is simply go up to this area, stop you out of one trade, you get into another trade, then drop back down and stop you out of that one. And that's trading as well, but at least you know what you're doing and you know why you've done it, and you can make your assessments off the back of that and iteratively improve and get better performance and better results out of doing everything that you're doing. And then you've got better odds. So when you're talking about what are the odds that this or that happens, it's like, cool, those are the odds that this or that happens, but what are the how am I going to interact with these scenarios? And there's a couple of different ways of looking at that. I hope that you found that somewhat helpful. Give Rocky a Jameson. Yeah, tell you what, I'll have some frickin' Ribena. Right, anyway, let me see. Just a little German. Oh, hey. What German do I know? Guten Tag. There we go. There's some German. BTC über alles in der Welt. I don't know what that means, but cool, nice one. BTC is the best in the world, I'm going to guess. Continuation up needs some small retracements or consolidation areas, or we're going right back down. Maybe wrong, but it's what I've gathered watching and learning the market. Yeah, well, there you go, man. I mean, that's it. Give Rocky a Jameson. Thanks very much. Great stream, Rocky, says somebody. Well, thanks very much. That's great to know that things are going along well. Wow, brilliant. Yeah. Sean, you're right. You're right. And how do we know that you're right? I mean, how do we know that you're right? Because you are. You're right. We can see it fairly clearly, right? We need some sort of consolidation. What did you say exactly? So we can have this continuation up needs some small retracements or consolidation areas, or we're going right back down. Maybe wrong, but it's what I've gathered. Yeah, there you go. There's a really good YouTube video for people just there in that comment in and of itself. Thanks very much for your contribution, Sean. How can we say that this is the case? You know, how do we know that this is the case? Like, look at what we've done. Look at what's typical in markets where we've had some rises up the way, which are followed on by then just continuation towards the top side with higher highs and higher lows. Pardon me. Is that whenever you do drop down past your previous lows, where do you go down to? Down past the point of where you thought you were before. Then you've got some highs, higher highs and higher lows, and where do you go to? You go down past the point of where you were before. Then you get some movements up the way, and this time, unlike these two, what did we have? Well, we had some small pullbacks here, and we had a little bit of a broadening structure in a sense, which gave us some small consolidation areas or retrace. What did you call it? Small retracements or consolidation areas. So we got some small retracements in here with a couple of sort of like consolidation type areas. And then what did we say happened? Well, the prices then went up. They were able to come back down after having come up the way. They were able to come back down to this area here on the basis that we had a consolidation area just in here. And of no coincidence as well that was ultimately which turned out to be the 618 golden pocket zone here on the move down from, on the move up to where we are now from the lows over there at the start of September. This is just looking recently, just this isn't looking back in the entire history of Bitcoin. I mean, there's other examples which go directly in the face of what I just said there now. For instance, this head and shoulders here, we had a pullback and whatever, but we didn't really have, we still just went straight on down past it once we went past these other zones here, really. But you can see what he's saying is perfectly true. Now we've come up here and we've had this upward side zone. Now we have had a retracement down to this area and a retracement down to this area. If we can find support at those areas again, or like this, and then go up the way, then what we're doing is we're doing some small retracements. That's what we're doing. We need some small retracements. So that's what that would be. Or we're going right back down again. Or we're going right back down again. And if that happens because, we've come up here, then right back down again at that point constitutes, essentially coming back down to where we are now. So if we were to go if we were to go up and then come right back down again, then, we're at where we are. I'm making a point there by saying that, but I'm left unsatisfied as if I haven't really fully got it out. Then all we're doing is coming back down to where we are now, essentially, which is all that Sean really is trying to say here, is that we're going up or else we're coming straight back down again. If we go directly up, then we'll come straight back down, and that's where we'll find ourselves where we are now. So you don't need to panic reading what he's saying in terms of the overall trend. But if we do go up a wee bit more and then come right back down and it extends beyond any of these zones, then we've got a real problem. And that's what this episodes are really all about when we're looking at them, is trying to assess risk. Where are the risk levels going to be? Is the risk level going to be in here? Is the risk level going to be in here? Is it going to be in here? And at what point are the dynamics in the run up towards that move then going to make it so that you're doing the first part where we just need some small retracements, or maybe the second part where we have some sort of consolidation area, or are we going to do the third part where we just come right back down again? So that's a really good point. Thanks very much for doing that. I appreciated that, and that's why I used it to make that thing, that little bit of chat. So we have a wee look. I know what that guy said earlier on. Rick said to take a look at the prices, Tezos, or no, he said, come on, Tez. Let's have a wee look at Tezos, shall we? Have a wee look at it. People often wonder why I bother looking at Tezos. There's a few reasons for it, and the Tezos community know them. One of them being that Tezos is had one of the biggest IPOs back in 2017. It's like a serious attempt at cryptocurrency in cryptocurrency heyday land. And since then, well, hardly anybody knows about it, despite the fact that it was, I'd say more people probably know about EOS than know about XTZ, which is crazy, because EOS has only ever been crap, and had a really obvious scam ICO, $8 billion. $8 billion. EOS, $8 billion. EOS, $8 billion. $8 billion. Anyhow, that's a scam. Whereas what you've got with Tezos, if we can just make our way back over to Tezos, is less of a scam, shall we say? Less of a scam. Less of a scam thing in general than what we can see when we look at EOS. Okay? Um, and all right. Anyway, there's also lots of other reasons. Like I like the community. I think it's very positive. That there's lots of good actors within it, and that there's a nice culture there overall. And that as well, this is really, really good for trading. It's really good for trading. Now, recently we've had to have been short on this, right? That's the reality of it. Now, I don't talk about positions and whatever when I'm doing trading. I spent more time talking about that today with that risk analysis stuff than I usually do in any episodes. But you have had to be short on this for quite a while now. Of course, when you started being short on this here up at this point, it was reasonable to start thinking that there would be profit taking targets along the way, and that we could then go past them. So when it went down to the sort of the 29k area and whatever else, then you diminished the short position, whatever. But then what ended up happening was that the prices then just went on right down past all of that. In fact, how did it do in terms of Fibonacci extensions? Since we were talking about this, let's just look at it first off with this here and say, yeah, and we came all the way down basically to the 1618 essentially after that move down the way. Now we're at the point, I have it over here anyway, could have seen it just there. Now we're at the point where eventually we can start to think, will we see things turn around from here based on more than just simply having had premature bullish divergence showing up on something. At least we have a historical significant area. As we look back and see the current price line tracing over to the left here, comes in at where we had these significant lows here before moving up back there at the start of the year, at the start of January. I mean, we look down and see that in 1 year we've had a 57% decline in the prices. In the year to date we've had a 16% decline in the prices. So we're 16% down from this figure here to where we are now, but really over the period of the last year, that is the area to be looking out for, and the 1500s, and we're in amongst that just now. Do we need to go directly to it? No, we don't. Do we need to hit off of either of these targets? No, we don't. Could it happen any time? Yes, it could. Are we going to be enthusiastic about a massive push towards the top side about this one? If we're going to be also saying that Bitcoin could go up towards 13,800, less so. So in order for this to be, just that idea, I spoke about this last week, people are like, if Bitcoin continues to rise, then maybe Tezos will suddenly get its act together. It's like, no, decouple those things. Take them out. They're two separate things. Quite clearly, if Bitcoin continues to rise and Tezos doesn't do anything, then it's going down more, right? And I've spoken about this in detail already in today's show even as well. So this is where we find ourselves, and what we have here is a low versus a previous low, which of course is bullishly divergent here in the RSI. It's not the first time we've seen this happen recently, but here we have it, and this is the 4-hour time frame. Got towards the 24-hour time frame, you can see that this is of course still the case, very much bullishly divergent. And what I mean by this is not the first time, as we can see back there on the 17th of October, a week ago or more from where we are now, that what is this? 10 days ago. That we also had bullish divergence there. We got a tiny little bit of a bounce, but nothing really, and we've come on down further since. What we really need to see happen is a combination of things. At least this maintaining its price where it is now, and Bitcoin falling back down the way, or this moving towards the top side and doing so in a manner which is quicker than the Bitcoin pair. Now let's just do a quick sort of look at that and what would that involve. Let's just say that we went up to, for instance, 252. That's a 20% increase in the prices. Now, if we were to go up in Bitcoin land to 20%, what would that look like? That would look like prices of 16 grand, which is kind of the stuff we were talking about 5 minutes, 10, 15 minutes, I don't know, however long ago now when we were talking about that. But you'd be looking up towards this area, of 16 grand. So if we can see 252 be taken out before Bitcoin is able to take out 16 grand, then we'll see a turning around here in the terms of the Bitcoin pricing. Now, this is a fairly big ask, It is a big ask. Okay, could we do it? Yeah, we could. It'd be a parabolic run up the way, and it would be dangerous in terms of the movements back down. Do we like parabolic runs? Yes. Is everybody always asking for them? Yes. Do we and all that? Do we want to see something like that happen? Yes. What happens afterwards? That so often. Just to go back over to what Sean was saying before. So, do we want to see a parabolic run? Sure. But are we going to be cautious about things in certain areas? Yes. Why? Because of that box of text right there. So anyway, it's a big ask for it to get up to those 16k areas, and if we did go up to 16k, then we want to see a pullback then. In which case, if we saw this taking out the 236 on the USD prices at 252, then what targets would we have towards the top side? So let's just chuck in around about 252. It'll be slightly different now that the prices have gone. Oh, no, it won't be different. It'll be the same. 252, right? Yeah. So we're in here, 252, 236, 252. So if we take this out, we could be looking up towards $3.50, right? $3.50, 618 up there. That there is a rise from where we are now of 86%, right? So for the Bitcoin prices to not rise up, the Bitcoin Tezos pairing to not rise up in accordance with that, you need to see Bitcoin going up 86%, right? Okay, 86%. I'm going to need more real estate here. 86%. 86% would be the price has got up to 25,000. 25,000. All right, for us to not see movements. Now, let's just bear in mind then, in terms of this thing, how much room we have to go without all-time highs and 16Ks and everything else happening, should we see a slight diminishing in the price of the Bitcoin pairing, or whatever. So, while this is a negative story, it could potentially become a very positive story if we were to see the negative pullback in the Bitcoin pricing, rather than having to see the disproportionate increase in the Tezos pricing in the face of the market having what could potentially just lead into a blow off top to make that happen. Instead, it'd be healthier retraces seeing that along the way, of course, as well, instead of that other stuff. Well, let's take a look at Ethereum, by the way, Tezos versus Ethereum. Again, a pairing that I suspect nobody actually trades, but whenever I've asked people, they've always said that they want me to keep doing it. A bit of bullish divergence here at the very end. Obviously premature, like I always say. Movements down below 51 probably would get rid of that bearish divergence, bullish divergence, just be bearish convergence after that point. There is the potential for us to have had, we did have like a wedge before. Oh, I was going to do the MACD. That's why I got rid of the Ichimoku cloud. Let's see if anybody's even still watching. No one. Okay, cool. Fair enough. Everybody's tuned out. I'll just say cheerio at this point. That's cool to come over here and see that nobody's watching. I'll just say cheerio. I've covered everything that I wanted to cover. There's plenty of other stuff that I could have talked about had people been still here asking for it, but they aren't, which is perfect for me because how long have I been at this? Over an hour and a half or something. How don't we know? Does it say here? Where does it say? Average watch time. Where are we looking here? How long has this been on for, this feckin' stream? An hour and 50 minutes. Way too long. That's great. More than enough time. Thanks very much for tuning in, everybody. I really do appreciate it. I'll catch you in the next stream. What I usually do, is you've made it through to the end of this video and you're still watching for some reason, is that we will... Oh, I've still got a viewer. Is that I'll be doing Tezos, Chainlink, Ethereum, and Bitcoin analysis in sort of stack videos that you can watch. The analysis always lasts for more than just a day or two. Yesterday's analysis from Bitcoin is perfect for today as well, as it happens really anyway. Let's just finish up here. Do you think the trend lines on the stochastics on the 12-hour make it look like we are at a longer term top? Now, I did actually talk about this earlier on during the Bitcoin section, or else it was in the video that I filmed, my abortive attempt. I'm not sure. Let's take a look at the 12-hour chart for Bitcoin. and then and look at it on the CMEs as well here, and have a wee look see at what we've got on the go. Now, just casting your eye back over to the left, the first thing that we notice is that we've got this. We have this little snaking around area. The most similar thing to it in the past, of course, was when we were coming in for this area here, and that wasn't a long-term top, so to speak, really at 12.5. Although we did see the prices drop down to 9.9 thereafter. So in terms of what do you mean in terms of long-term tops, I would say that maybe this constitutes one of those. There with the potential for 20% drop off, yes. In terms of like long-term tops, what did we have then thereafter? Well, there was this top up here which came in, and that was a long-term top, following almost 6 months of downward price action thereafter. Going to ignore the coronavirus one just for here. So what we're seeing here is that we didn't have a run-in of well, no, we see that there was divergence here in the RSI before we saw that on the stochastics. So just to combine that together, yes, so the RSI's got that on there as well. We see that we're pushing up here. Yes, I'm going to say yes, because movements back down below the outside of the oversold or overbought territory at this point here would be quite negative, in a sense that we don't come back down this way without really going on down to test the neutral line, as we can see looking back the way on this 12-hour time frame. In which case, if we go back down to test the neutral line, then you know that's some distance away in terms of price action. We should put this in as a major top, and anything down to any of these targets here would be significant regardless of the amount of time that it took us to get there. So I would say yes. All right, hi Peter. Oh, concurrent viewers 13. Oh, there's 13 people. If you were watching the live stream, you'll have seen it said 0 there, right? I mean, you saw that when it was on screen at that with the mouse. Just now it says 0. Weird. It just changed to 0. So there you go. If you take the trend line off the tops, it looks scary. If you take a trend line off the top, it looks scary. Okay, cool. You mean like because we're looking at this thing here? Is that what you're talking about there, Jimmy? That's a good point. Yeah, failure to push on past this zone and go up and take out the highs in July are going to be negative for a couple of reasons. For one of which being that, of course, it's bearishly divergent until such times as that's happened, and also because of that trend line there that you're kind of getting at as well. On this is a 12-hour though. I wonder what does this look like? Let's look at this. Let's look at the same concept on the bigger time frame, and let's just stick one in down below here, just so we can see how this shapes up. I know that that's wrong. I just want to see how this shapes up as we go through the time frame here, looking at a couple of different things. As you can see, I did it with accommodating that in mind. So there's a 24-hour time frame. There's a 2-day. How's this look on the 2-day? Sorry for licking my lips too much, by the way. Got an itchy lip. It must look weird on camera. It looks like we've broken that downward trend in a sense here in terms of the 3-day with where we've come to. So that's interesting to see, but at the same time, yeah, wonder is that what you were meaning? Yes. So there we go. Yes, it does look scary. Yeah, you're right. What about 4-hour time frame then instead? Stochastics here. So the 4-hour finds ourselves coming right up towards this oversold zone, but not able to push about outside of it quite yet. 13,371 not being a high enough number to drag us out. I wonder if earlier on in the video and the prices were up higher, were we just poking our heads above that parapet or not? Clearly, as this high is coming in versus the previous high, that's clearly divergent, you know, if we see a turnaround. One of the things, just to go back to what Sean was saying earlier on as well, to have his comment on this one, Sean was saying we need to see pullbacks or else you see it fall back down. Well, yes, because if you want to see, if you keep doing this, then it turns into the sort of 2008 financial crisis. You know, no, just kidding. It turns into, you know, that you're operating in a you've got a debt to be paid in terms of these things, and you keep on kicking the can down the road, kick it down the road, kick it down the road, kick it down the road, eventually somebody's going to have to pay the piper, right? And that's how these things work. So unless you get sort of healthy, and that's what we always talk about on the channel as well, healthy pullbacks. Let's just dive on over here. Yes, it's 4 hour oversold, and it's the third touch of divergence on it, the RSI and the DMI. Cool, excellent. 4 hours, here we are. Let's look at the DMI. I mean, there's a couple of key things to be aware of when it comes to the DMI, you know, which we've seen in the past when it comes to moments of like this. What we've seen in the past after these events has been interesting, to say the least. Now, in this area here, what we see is that the prices continue to go on up a bit, but we had this clear signal to us in advance that you could have afforded to have got worried about the pricing and how it was going right up from 11.5 to 12.5. The prices went up another grand, and you were thinking, hey, I'm a bit worried here about the prices. They could pull back. Went all the way up another grand. But where did they pull back to? All the way down to 9,800. $2,000 lower than it was when you started getting worried. Over here, same scenario. We can see that the ADX line itself is coming back down towards that 40 point. When it came back down towards the 40 point over here, you know, we still had this next high to come in at, and we still had this next high to come in at. But then, of course, we dropped right down the way, and that was a significant point there. So, you know, anyway, while this is obviously, while we've got plenty of time to look at this and not get too carried away, that's clearly the situation that we're in right now. You know, exactly. Can you do one of these bar things on oscillators? You can't, can you? Bars pattern. That's just not going to work, is it? Nah. Yeah, so no, you can't do that on the oscillator. It would have been nice to have been able to do that on there and just drag it over and say, and look at that. Anyway, you get the idea. Divergent here. Let's see, 4 hour time frame. Well, okay, our recent high on the 21st of October came in without the divergence over the 9th of October, in terms of the 21st of October not being divergent compared to the 9th of October back here. Then subsequently, what we've done in this section here is all divergent. Yes, you're right. On the way down here, we've got lower and lower highs, while we're higher and higher here, so that's quite obviously divergent. It's always handy when you're looking in an uptrend at the DMI to make those divergent points. It's harder during movements of downward price action to do it with the negative line, as all you outcropticians will appreciate, of course. We can also see by the volume as well that we've not had anything, you know, just like these volume candles were big, looking back the way these volume candles were big. These were big. These were big. Would we say that all the ones that are along here were big? Not really. Not really. Not like if you had to sort of say, do they stand out or whatever? Not really. They've not even come as close to the ones where we you know, as these. Not quite yet. So we're seeing that diminish in volume. It always has to be a little bit subjective when it comes to diminishing volume on things, because on cryptocurrency, look up towards the 24-hour time frame and you can see as well that while we've got this sort of structure, it looks nothing like what you get in terms of Forex and stuff like that. Just remember that Forex volumes are far more clear in terms of volume, right? It's like just the difference here when you're talking about the liquidity in Forex, and then when people say about, you know, volume stuff, I just wanted to take a quick second to jump through a few Forex pairings so that people can get an idea. I'm going to have to delete this story off of here. That was fun and all, and that was nice of me to be honest and tell people about a mistake that I made in the past, but I don't need it on there covering up my charts anymore. Thanks very much. Yeah, what was I trying to get to? Yeah, the volume, and you can see then it's slightly different here with more erratic peaks and standard deviation amongst it all and whatever else. So just kind of wanted to make that point there, that while you see these peaks up and above, that really we've got to look towards the averages, and that while the price has gone up and the average volume has gone up a wee bit compared to just this section just here, that really, you know, on average, so to speak, we're actually lower than we have been for some time. If you wanted to And nobody does this. This is the reason why nobody does this is because it's not a thing to be done. But let's do it for the laughs. Let's take a fib retracement off of our volume down to 0. And you can see that until such times, right? Now this is let me just be very clear, this is not technical analysis. But let me be very clear about the volume. Volume is not big. We had big volume back in July last year when we pushed on, all the rest of it. Volume now, not big. Okay, big then, not big. How is the volume now? Well, compared to where the 236 comes in at, we just touched the 236 with our peak over there on the 21st of October, then pulled back again overall. Okay, not big. So the volume overall diminishing, I would say, as we've been going up throughout this period. So yes, but does that mean that we can't just kick back in and have a great rise up again? No, it doesn't. But let's just draw a real distinction here between these three peaks here during this upward trend here, and these peaks here during this upward trend here. Let's just make sure that this point is fully heard by people. Okay, so just there we go. Let's just check back over with the comments again. Would be interesting to see some comparisons between the DMI and a historical yeah, but I would have to change up my things. I'll do that some other time. I've been thinking that myself, to be honest with you, that it'd be nice to show zones when we've had the background here versus some historical volatility indicator there on the charts. I've just not done it. It's something. Yes, good idea. Very, very good idea. I think outcropticians would very much appreciate this chat. Whether or not anybody else would appreciate it, I don't know. Should I just do it at some point? Yeah, I will. I don't think I'll do it now because I can't be bothered mixing my things up. Although, I mean, I could. I mean, what particular... Did you have a volatility... indicator in mind? You specifically this historical volatility one. Did I ditch the Ichimoku off of here? I did. So let's just stick historical volatility on there. And let's make this way more visible. Okay. Well, in terms of, let's make some high and low points on this thing as well so that people can see, going back, this is the 24-hour time frame. Look at that for volatility there. That was so huge in March. You can see how outside of the norm that is. Instead, going back the way you've got various other periods in time when it was really high. I mean, that was incredible. Just so that we've got some numbers on here to make sort of comparisons with. I'm using a Fibonacci retracement here so we can see, various areas on there, and then stretch this up a wee bit and see where the prices are coming in at around about time. So here when it's white, is it below the 236 is kind of the question that I want to ask. Didn't draw this far enough. Give me the options. So or are we below the 236? Well, we're very much below the 236 when that white bar is coming up. Interesting, as you see, drop down here, drop down, low there. I hate the zoom left and right things coming in at whenever right on the point that you're trying to make. Here, very much a big low. Then we came back up. We touched the 236 in between times when that was not shaded. So essentially, you can say yes. In fact, when we see this white thing popping up again, and we're below the 236, come back up again. Yeah. So you can see that the DMI does a good job at showing us the historical volatility when it's at lows. This is going back to the very, very beginnings of time. What about if we wanted to see this from a very broad perspective? We'll go into the 24-hour, the daily chart here. Oh, FFS, my thing's disappeared. Do I have does it show up here? Historical volatility. No, okay, so I'll just have to draw another 236 in. Maybe this is a better place for it anyway, given we've got all these other highs. That's the March one there. See, this isn't an oscillator this has got an unlimited high on it. This could go up as high as you wanted it to. So it's not your typical sort of oscillator that goes between 0 and 100. Maybe there was a specific one that you wanted to look at. This might be a decent enough point to draw one in from, though. Anyway, we'll use March after all in terms of our highs and lows. And say a couple of key things that normally the prices struggle to get above the 618. Obviously, this is where these two lines are next to each other. And when they do, they sometimes do. Okay. Now this isn't how you would use Fibonacci's. I've purely drawn this on here so I can get some idea of sort of key areas and how the prices performed around them. Again, white, then it's gone below it since then. We've been living below it, but with the volatility. Well, you can see how we've not had one. We didn't get one here, right here. We didn't, but that was so close to having one. Anyway, the DMI must have come in very, very close. It's almost below 15, and what I talk about is it being below 15, really. So maybe I should just change this setting on this just so we can make this comparison. If you're wondering, you can get this from me in the Discord quite easily. Let's just put this up to 15 and see then, and then and around about that 236, we can see the 15 level is important on the daily. It doesn't often kick in terms of here, the volatility, historical volatility is dropped, then the DI drops down, or the ADX drops down, which makes sense in a way because during these periods where just beforehand it's jumped up a bit and come down, then you're looking at that having obviously had a knock-on effect with the ADX, which is a moving average, looking back the way. So that makes sense that it had that. That's interesting. Anything else you want to look at? Thanks, bro. In this time and this BTCD, what a better coin for trading? All right, Mustafa, good to hear from you. What's a better coin for trading? Well, it really depends on what you're looking at for to try and get out of your coin, or out of your trades, I should say. Looking at Bitcoin, it's a good coin for trading, and there's plenty of opportunities to be had here. Ethereum itself, if we take on that argument before and we get a failed diamond pattern here, and it doesn't move down, instead it just moves towards the top side, and we're looking at the Ethereum Bitcoin pairing, and we're saying this is a fallen wedge here, which is historically, statistically more bullish pattern to play. Then we get a movement towards the top side. And perhaps if we see this move towards the top side at the point how we're seeing the Bitcoin dominance, perhaps, I always do that, move down the way, then, if this is moving down the way as this is moving up the way, then that's a very, very, very good coin to be trading, as opposed to Bitcoin, and that's just Ethereum. But Ethereum and Bitcoin, of course, move largely together in terms of the overall shape of the market. So in which case you're looking towards other choices, in which case we can come in, do a couple of comparisons, like Link versus Bitcoin, Link versus Ethereum, and say, well, if Link versus the dollar is able to push up past some of these other targets we've got and come into this $15 area, then what you're looking at in terms of where we are now to there is a movement of around about 10%, or more, in fact. 26%, sorry. And if then we see this moving up versus the Ethereum and gets this positive pattern here, which is a historically speaking more positive pattern with this ascending triangle, and we push outside of this zone, then of course we could be looking at a measure of something like up to the 0.037, given that we're here at 3.6, that's more than 20, that's another 25% move towards the top side, right? Then the Bitcoin pairing, if this wedge here were to play it with a positive spin off of it as well, then you'd be looking at going up to 126k. We're at 90k at the minute, so 30% there on that one. So Link would maybe be a better option than either Ethereum or Bitcoin, depending on how you view this going. And if you see this as being a chain whereby you're first off you're looking at Bitcoin and saying, well, is Bitcoin going to go towards the top? Because if it's going towards the top, I'm trading Bitcoin, forget the rest of them. And then you're looking at the Bitcoin dominance thing and thinking, well, maybe the Bitcoin dominance thing could pull back. How's the next big coin doing? Ethereum. Well, maybe Ethereum could pull back as well, or it could keep going to the top side. But if it keeps going to the top side, I'll probably just keep trading Bitcoin. Or you're thinking, I'll trade Ethereum. Well, in that case, you're looking at Ethereum Bitcoin pairing and looking for it to move towards the top side against Bitcoin, regardless of the underlying dollar value, even if they both drop, which is fine because you're looking to accumulate more Bitcoin, right? Then, if you are concerned about the dollar value, really, so you wouldn't like to trade Ethereum positively against Bitcoin because really you'd be trading Ethereum versus USD instead of Ethereum versus BTC on that particular pairing. And then, of course, your account would be subject to risk and perhaps even being liquidated, whilst you might laugh and say, I've got more Bitcoin than I had before. That's useless if you get your account liquidated. Then maybe you are looking towards these dollar coin options as well, in which case you might want to look between Link and for instance, and Bitcoin and Ethereum and see if you feel like there's anything in the works there which could be a positive move towards the top side, in which case you could well end up being, fairly safe in terms of its dollar coin proposition, whilst also experiencing gains against the other ones. So really, what's a good coin to trade depends on how your perspective is. And if you're looking at this as a chain and you're really saying, I'd rather be at the front of the chain there on Bitcoin, trading there where the liquidity is, etc., or if you're withdrawing that down the way. And then, of course, it becomes, eventually at the far end of it, you get sort of lottery ticket type coins as well. If I was looking at something else like XRP, wouldn't say that that's a good one to be trading. However, like the comparison that we were making with Tezos, I just like to draw this out here that, we spoke about Tezos and back in this, just making a comparison between its last significant low area and compare where we are now in terms of where we've come from. Looking at this, you can see that we're lower here on the price action than we were over there. We're lower in terms of the RSI and whatever else. That this is just a downward trending shape. That you've got a high, a low here, a lower high. Currently a lower low. Now, if we see signs of a reversal on these things, then a good coin to trade would be any of these. I'll do it with XRP just here, but we can look at it versus Tezos as well. Similar situation with regards to its price. But the question becomes, at what point do you take profit on those things? And what's a good coin to be trading for that trade? Now, this is to answer your question correctly. This is it. Now, whether or not that actually helps you trade is another question, and whether or not you actually are able to take this advice and run with it is another question. Of course, it's not finance advice. I'm not a financial advisor, etc., of course. But this is what it boils down to, and the conversation that people have when they talk about altcoins and everything else is done from the point of view of somebody who just wants to get a ticket to the moon and wants to ride it forever and all the rest of it, and that's just foolish. And of course, that's what every single other channel that I've ever seen that talks about altcoins talks like, dare I say it, even Benjamin Cowen, who ultimately acts like an investor. He's vocally disparaging towards day traders, which is, I think, is not his place to do that. But which is okay. I've not got any comment on it other than I don't think that he's the authority to be doing that. Really, that I would listen to somebody else first, but whatever, that's fine. But he's doing it, and by being disparaging towards him, he leaves himself open to criticism and that sort of affront as well. And I would just point out the fact that if you're going to be trading things, this is what it is to trade, and it's what he doesn't really get the idea behind it. Anyway, if you're going to be trading it trading style, you're looking at this. If you're trading it like with the point of view of sort of like looking at risk to reward ratio charts that Benjamin Cowen puts out or whatever, then you're not talking about trading. You're talking about investing. It's a very, very different thing. Very, very different thing. So, as a trader, to answer your question, then you could look down here, and if we start to see a rise up the way, then you could maybe try and take advantage of one of these moves. Let's say, for instance, that you saw the prices of it taking out the 236 over here, and you wanted to take advantage of this and take profit. Then you'd be looking at a 20% rise. Now, this is Ripple versus Bitcoin from the point of going up past the 20 thousand Satoshi or the 2,000 Satoshi or whatever that is level up to this 618 here, and not even trading in this area over here until such times as your risk profile allows you to do so, whereby you'll be able to manage your risk very easily here. Just as simple as that. In which case, then maybe to answer your question from that point of view, that chain where you see Bitcoin's maybe dropping, or maybe the Bitcoin dominance is dropping, or something along those lines is giving you questions, or you don't like the disparity between the Bitcoin and Ethereum pairs and how they're moving along, and then how you would go and answer that question is what's another good coin to trade. This is an example of one where you can get a 20% increase in your Bitcoin holdings by putting Bitcoin into at this point and taking it back out again at this point, should this scenario resolve into reality. Now, how would that look if you did the same sort of thing with Tezos? Now, here we go. Here's Tezos down here. We've already got a Fibonacci drawn in the same style. That means if you were to take a trade of it past 21,000 Satoshis, this says 2,101 here on the screen. It says 15,000. This says 1,581. The actual number is missing a zero off the end there, so it's 15,790 at the minute. If the prices go past 21,010, then you're looking at the 236 being, and if we can push past that zone, then we're taking out these two highs just over here. Then you say, if I want to make a move on this one, you're looking at 45% profit versus Bitcoin, right? So if you thought Ripple was good, there's a profit versus Bitcoin of 45%. So say you had one Bitcoin and you put it in here at this price and took it out at this price. This is not financial advice. This is an arbitrary example using one Bitcoin as an example to give you an idea. Then you would have 1.45 Bitcoin when you sold it back in here at this point here. Bearing in mind that what you've done at this stage is simply come in here for a golden pocket retrace. Now, that's incredibly greedy, right? There's no trader in the world at all, in the entire world, honestly, including cryptocurrency and everything else, that's actually serious and professional, that really demands moves like this, right? There's no trader. Now, there are investors that would demand moves like this because they're not traders and they don't get what we're doing here, but there isn't one. This is called greedy AF. If I wanted to then just make a couple of points before you'd even got there, you're looking at a 32% rise up to get towards the 236. It's one of the reasons why you're able to say that things have changed around and they're quite positive, because we've already had a price increase of a third by that point already. If you were to go then from this point to just simply up to the 382, the shallowest retrace, you're looking at a 15% move towards the top side. That's more than enough to be happy trading with. You'd be happy taking profits before then anyway. If you were looking at this realistically and actually wanted to trade it, you'd probably be looking at taking profits in around about 9.7%, where these wicks were previously, with a sort of simple sort of risk to reward measured thing coming in here with, say, you long it there, you take profit here at these wicks, and you manage your trade judiciously, and think about a risk to reward ratio. Say you're going in at around about something like a risk to reward ratio of something ridiculous, like 6 to 1. Let's actually go a bit better. Let's say you managed it. No. Yeah, okay, let's call it 20,500 would be a decent enough place. Then you've got a 5 to 1 risk to reward ratio. You're taking out your profits here at this point. You're not even going for the 382. You're trading. You're doing really well. You did that with one Bitcoin. You did it at spot prices. You didn't use any leverage at all throughout it. Your profit at the end of it is that you're left with 1.1121 Bitcoin at the end of that. Take off your trading fees. Everything's good. You're a winner. And you didn't use any leverage or anything, and you're trading. Now, when Benjamin Cowen says disparaging things about people who pretend to make money from trading, it's because he doesn't understand this. Neither do a lot of other people understand this. Now, I don't educate people on this on a daily basis. This is implicit in every single thing that I say. I hope you take away the lesson from that. I hope that's an advantageous answer for you in terms of things. Perhaps you were looking, just to kind of wrap this up properly, maybe you were looking for something more like, in terms of an answer, something like band, where we can see if we did the same scenario and we come in from its top down to its low, went from the 236 to the 682, we didn't even, and we were looking at that, you're looking at a 68% increase in its price. Maybe that's the answer. So we've had 20, we've had 40, now we've had 60. One of them in there is an answer for you. If you're looking for coins that have got potential for something else, just something else, then maybe this is an answer for you in here. With this one, we're moving up towards the top side. With Algo, you got 50%. Maybe 50% is the number you're looking for. Essentially, doing this analysis is me doing the work for you at this point. I've explained everything to you. If you want, go ahead and find the one that you're looking for, and then you can trade that. And this, of course, is directly to answer that question of when we're looking at this with regards to the BTC thing. So anyway, that was a well good way of looking at it. Perhaps build that into your DMI, so when volatility is at similar levels, you get a background flash or something. Yeah, cool. Maybe you'd have to code it in. That's a good idea. Yeah, maybe. How's everybody doing, by the way? I realize there's still 12 concurrent viewers. I wonder how everybody is. Let me know. That's cool. By the way, that was really cool of you to share that picture, Peter. If anybody else has anything else that they want to share in there, then let's do it. We really covered this whole thing to death, didn't we, during this episode? I think we've analyzed the Bitcoin to death, and I think that we did it in a way which demonstrates a lack of FOMO. If you look at, let's demonstrate our own lack of FOMO to ourselves in order to give ourselves all a big nice pat on the back, shall we? Let's do this by going down to the 15-minute candles here and looking at how long ago did I start my stream? I started my stream... This is this stream, by the way, because obviously I had a different stream that nobody watched that I talked on for 25 minutes. You'll find that on the channel if you want to go and watch it. It's just me talking to myself for 25 minutes. Where did I see how long this has been going on? 2 hours and 23 minutes. 2 hours and 23 minutes. So an hour is 4, 2 is 8, 23 is another 1.5. So we're talking 9 periods back. 1, 2, 3, 4, 5, 6, 7, 8, 9. So the prices were up here in that region when we started our stream, and since then they've come down. They've gone all the way down as far as 13,324, and we've had highs up here at sort of near enough $13,500. We're currently sat here at $13,400, so we're able to conduct ourselves within the markets without a fear of missing out. We've been able to demonstrate that to people over the course of 2 hours and 20 minutes. If you'd sat down at the charts yourself this morning, wherever you are in the world, or this afternoon, should I say, depending on where you are in the world, and what you just witnessed was this here, and you hadn't seen any of the other stuff so far, you'd have arrived at the charts looking like this, which is how they looked when I started streaming today. Just with this bit up here, you might not be able to see that from where I'm hiding. That's where I started streaming at anyway, around about these zones. And you'd have been thinking, well, either you'd be like a Rocky Outcrop, in which case you're thinking, everything's gravy, baby. I'm going to do my technical analysis. There's always time for that. Let's do it. Or perhaps you're up here and you're thinking, oh my God, 13,300, 13,400, 13,400. That's much higher than our previous high. We've gone outside of the bounds of this triangle. I'm going to have to long this right now. I'm going to have to long it right now. In which case, you're sat in a long position from, let's call it where the bodies were, because we had 4 of them, so that's reasonable enough, right? And you've not stopped out, which means that your risk to reward ratio is at least this big, okay? It's at least that big, because you've not stopped out yet, so we know that for a fact. And what we're looking for here, we're looking for a 4-to-1 area, more or less, 4-to-1. Let's go 4-to-1. That means that you need to see the prices go up towards $14,000. $14,000. You need that to happen, or else you just took a trade which was a little bit moronic. Sorry, but that's what you did. Now, of course, if the prices go up to 14,000, cheers, well done, you did a good trade, but you did it off of the back of FOMO, presumably having not really known what you're doing. Whereas, had you taken the same trade down here, any of these points here before it moved up, let's say you traded at 13,150, relatively high number, What about, say you traded it down here at these points? Well, you've already taken profit, in which case, what you were doing if you were longing it from here and without any FOMO, and you were looking at it down there at 12,800 thinking, what's a reasonable way of managing this? The way you could have done it was, say, around about here, looking down towards 12,650, saying, stop out there. My risk reward, no big deal. It's less than 4 to 1. No, sorry, it's fucking 5 to 1. It's 5 to 1. No big deal. It's great. And you do up there and you're taking profit today at that point. So then let's say you did it in between times and you were doing it from this area here. And you were looking up towards the top side. You're still waiting for that 13,800 area. You decided to long it at around about 13,150. You're thinking your stop out maybe around about 13,000, and you'll take profit of that. This is actually a reasonable trade. This is a reasonable trade based off of reasonable reasons for it in advance. You know, where you were looking at it and you're saying we're consolidating here sideways, we could break out one way or the other. I'm going to manage my risk in it around about the upper and lower ends of this consolidation phase that we've been in here since the 27th of October on this 15-minute time frame. I don't trade the 15 minutes, but this is how you could have done this. And at this point here, you're looking at having got your position into 2% profit. You could easily then have your stop loss up here, or whatever. You could consider it to be a free trade. You know, the very minimum that you're going to make, it can be 2% profit, or it could be, you know, you could stop out in profit no matter what. So like you got risk free, which means that you can now extend your stop area down to here. And while this says 3 to 1, it's actually not, because your risk is 0. In which case, if you wanted to take 5 to 1 at this point, you'd be looking for a risk-free trade where it's 5 to 1, 14,000, but you know, anywhere in here. Anyway, let's check in with what people are saying. Great, thanks, great video. Thanks for going live during the volatility. Nice FOMO-free way to do things. Yes, that was it. Well, it was credit where it's due. You know, I was told by one of the Rocky Outcrop out there that, and thank you, by the way, for that. Good idea. Just to go live, try it. Why not? Do it here during this point in time. Because I was told, because I said I was going to start making my videos, and then he said, well, why not just make them live instead? And here we are, and we've done it. It's been 2.5 hours of looking at the charts live without any fear or greed since then as well. If you were to have come in here and decided, you know what, I experienced too much FOMO. I ain't going to live a life of FOMO and tears and whatever. Instead, I've just opened up the charts and saw that the prices have gone up to 13,400. Everybody's saying the prices are going down to 13,800. I tell you what I'm going to do. I'm just going to live life on the wild side. I'm going to short it right from here. Boom. Then what you could be doing is, well, if you were doing that and you wanted to have a 5 to 1, now, I don't care about this 5 to 1, whatever to 1's ratio bollocks, but let's just say that you wanted to take it back down to 13,150, where that stop out zone would have been earlier on. That's 3 to 7 there. Could we have had this here at 5 to 1? Yes, indeed we could have. Could have had a stop loss in there at 13,500. Said, this is fair enough. I will take profit down here at $299 away, $300 move, 2.2%. Nice move. If you were to do that, of course, using one whole Bitcoin, you'd have made $300. You'd then be like saying to everybody, this is why I'm a Rocky Outcrop, you know, this is why I don't experience FOMO and fear, because if I had lost there, then I'd have lost, you'd have lost, what, $56 for the chance of making $300. It's still on. This is still on. But at this point here as well, you would be able to move your trade into a risk-free zone if you even wanted to as well. So you could simply just say, well, that's where we stop. That's where we got in at roughly, or whatever. And you could be happy enough to take profit as well. Any of these zones. In fact, you could even have to have you could just guarantee yourself some money for the day, having spent nothing, and you're and you could say, well, well, not guarantee yourself some money, but say, look, I don't care if I make nothing, I've spent nothing, I'm not going to lose anything, and you could make 89 quid just with it coming back down to testing 13,319. It'd make £89 $89 if you were trading with one Bitcoin value there just for that thing, and that is not to be sniffed at. It's not to be sniffed at. Okay, so that chat I had before with Mustafa about 45% increases. What have we been talking about here in terms of trading? In terms of what I just talked about there now, you'd be looking at 1.11% move there if you're to take profit at that $89. 1.11% move, totally doable, totally fine. Don't ever let anybody profit shame you. Never. What we see here is since then, obviously, this is the since we started filming to now candle on the 12-hour candles, by the way, because I started going live about lunchtime. We've seen us come back down and retest that yellow line. What is that yellow line? Well, that yellow line is the conversation that I had a while back there in this very show about how this could potentially be in some sort of wedge pattern, and if it were, then blah blah blah. So if it were in this and it were to pull back down and go below this yellow line now, let's just start getting a bit jiggy with it and saying where we could see prices going down to. Well, we could see them go down to 11,000. If prices went down to 11,500, and this is the 12-hour time frame, what we can say with, by benefit of this white line here is that we know quite clearly that movements down to this zone would of course be putting in a higher low overall. If you want a higher low compared to this last area that you're looking at, 11,500, if you want to be higher in terms of something like a bigger term time frame, then it's very, very easy. You could come down to, this is just flux on the way up. As you can see, you've got a high, a low, and a high. This isn't anything. So you'd be talking down to $10,000 there. Anything down to there would simply be a higher low. And of course, well, you'd be having to look at this for the measured move off the back of it. Let's just draw that measured move down again. It is rather huge. So say you were to look towards that, and let's just do its textbook style and say you're looking for 60% as well, just so it's not so like disgustingly huge on the screen there. And it could be. Just bear that in mind. Then your fake out zone takes you down to here anyhow, in which case you're putting in a higher low versus that area if that were to happen. What we want to see happen, of course, is simply the continuation of the trend, and it's like Sean says, we need to see some pullbacks at some point, or else the whole thing goes to pot. And how the whole thing would go to pot would be that if we did see a move, even if it was from here and it was going back down to that 10,000 area, you're talking 25%. Therefore, any movements higher could potentially still include this. So when you're looking at, just to suppose again, from what Sean was saying, if you don't have areas to go back to find support and resistance at, and the last two of them are just there, and then you continue to move up without taking any breaks off, then eventually you're looking and the areas become your previous high, your previous high, and then down the way. If we do that at the minute, the move down to our previous high is 10%. Now we see 10% moves all the time, and that would be, of course, within, we could stomach that, and that'd be fine. The conversation wouldn't have really changed too much. That's from here and down to our previous low, 25%. If we go up towards 14K and take a move down from there down towards our previous high, looking at 15%, looking down to nearly 30% for a move down to the previous lows again. And considering a lot of people out there are going to be trading all of this with a lot of leverage on the go, that would absolutely be account destroying. In fact, either of those moves, any of those moves would destroy the average person's account anyway. So this is why we can consider this area in here at 13,333 to be of somewhat importance, shall we call it, as well for us right now. 13,333 being important, want to stay above it. If we're going to just be sort of, quick about choosing some targets, movements down below 12,601 are going to be, negative and could potentially everything's going on the go outside at the minute, fire alarms and or whatever, fire ambulances. We could be looking down towards 12,061. Next target thereafter would be 11,625. The next target there would be 11,071, and that still positions us miles away from doing the stuff that we were talking about. It only really takes us down as far as the lower end of that wedge if we were to be doing it like that. And of course, I think the whole world would be crying tears of blood by that point, if that were the case. Now, am I negative on this? No, I'm not. I've already explained here in terms of where your risk management would have been had you been looking for this. I've also really explained that if you were to long it from right here as opposed to earlier on in any of this previous time, how much you're really looking for in order to get a reasonable sort of risk to reward ratio for you. Not that you can't do it as well, and not that you need to take that massive risk to reward ratio and run with that either. Of course, you can quite simply just manage your risk and do it that way. Absolutely. So be aware. Let's just jump back over. Can you turn on the captions? Can I turn on the captions? Are my captions not on? Sorry, mate. Enable live chat. Yeah, I want live chat. Why is it live? Why has that not happened? No. Live chat replay. Yeah. Details. I don't have captions because I don't have captions. Sorry, mate. I honestly don't know how to turn on the captions. If you tell me in this box down below how I do that, I'll do it happily. Stream settings. DVR 360. Add a delay. Close captions. There we go. It's grayed out. Is that because I've started already? Honestly, don't know why these captions aren't live. And maybe I would need to start and stop the stream again to get it to go. And I'm not going to start the stream again. It's been on for 2 hours and 40 minutes now. So, yeah, I can't. I'm sorry, Garden Prophet. I can't. There should be captions, I guess, once it's finished processing. Yeah, sorry about that. I'll make sure if I do another one of these streams that this is ticked beforehand, if that's even a thing. Yeah, cool. How are we doing anyway? Is there people still watching? I know that you are because you just asked. Analytics. 12 concurrent viewers. Cool. Okay, well at this point I'm going to put it to you guys. Do you want me to keep going or not? Thank you so much for tuning in, by the way, to everybody. Really do appreciate it. We've covered an awful lot. Ostensibly, you could say that the coverage has been from a bearish point of view, right? You could say that. I think that would be a naive label to put on this stream, and that actually everything's been done from very much the bullish point of view. You're welcome, TradeSpot, and thank you so much, Jimmy. Yeah, so everything's really been done from the bullish point of view, and what we're looking at here is risk and how to manage it appropriately and how we would know early doors if things have gone wrong. The only thing that would make this a really, really incredible bullish video would be if during that stage when I was looking at the risk to reward ratio for a move from right here to where you'd have to see the prices going, had I said, and that's a really, really good trade that you ought to all do. But I'm not a financial advisor, none of this is financial advice, and of course I don't think along those lines anyway. I've explained exactly the positions that you would want to be in, how you'd want to manage them, how you could look at it in various different ways. I've looked at the Ethereum prices. I've looked at Bitcoin on the CME chart, although not hugely. Is there any gaps on here you want to be aware of? Is that one down there in the 1 hour time frame? There's technically a gap in here on the 1 hour time frame. Stick a little ray in there. So, you know, that comes in at 13,075. That gives you that 89 quid profit, more than, in fact, in terms of the trade that we talked about there, in terms of various different ways you could do it. Obviously, I'm agnostic as to how you approach what your approach is in the market. What do we have here? Oh yeah, another gap on the GBTCs, which have only opened up relatively recently. Go down to the 1 hour time frame and stick another ray in here. I'll stick a ray in down there so we know where that is. So we have a couple of things below us which are giving us, you know, the potential for pullbacks, of course, which would be totally reasonable. We can see here in terms of the Ethereum pairing that there's a concept that we talked about in terms of this right now, in terms of could it be a diamond top? If it were, then that would be quite often I've had people ask me, is this a diamond over here? For instance, people were talking about, is this a diamond? People were talking, is this a diamond, Rocky? I had to say, sorry, that's not how diamonds work, buddy. So they were asking, is this a diamond, Rocky, at this point here? And well, a diamond is, I would look for them in terms of like tops and bottoms, reversal patterns. Were they saying they were saying this is a reversal pattern for the downward trend, which is again against it, but you can't say that. That's that doesn't work. It's not a continuation pattern, and we've seen the outcome from it anyways being towards the top side. Anyway, so that was obviously a failed idea. But from this broader perspective, could this be one at the top? Yes, it could. I invite you to contradict me in terms of, looking at the textbook and telling me that I've got something wrong there. If you like, that's no problem. But generally speaking, we've had a clear uptrend. We've got a clear area here. That's something to be looked to. We've also looked at the Ethereum Bitcoin pairing. We've talked about the movements that they've had away, down towards this wedge here. So far positive in around about this 0.03 area. This is a target that we had in mind. In terms of the volatility still being a possibility, it's here on the DMI down below, which is actually missing a few of its options. It's still a possibility, but there was a reason that I reduced that down from being 15 to lower and keeping the DM at 15 itself. Maybe I'll do what TradeSpot suggests and try and incorporate some historical volatility into what we were looking at here. Maybe if you're looking at this thing, you want to see it in a different way. By the way, you might be more familiar with looking at it in terms of like a histogram as well as we come down the way. I really don't give a crap about that. But we've talked about this, and we've also talked about this in relation to the Bitcoin dominance chart and how we could be, experiencing this wedge. Oh, look at that. Since then, we've got a wick instead of the body being on it. So that's nice to see during the course of this episode. We've also talked about Link, with regards to where we are in the pricing and where we could be moving to. Link versus the dollar, finding support in here at this horizontal yellow line is going to be key for us. If we did move down the way, then the next negative target, in terms of, extremely blowing your head off, would be down here at either 679 or 532. More reasonably, you'd have to look towards the 826 area, which lines up perfectly, of course, as there's no surprise to Rocky Outcrop competitions, with the 618 golden pocket zone in there at 850. But really, currently, we have to remain looking towards our target of the 618 golden pocket zone as long as prices are above that 1033 area. We could be going up towards there. Already, magically, for people who've been able to benefit from watching the Rocky Outcrop show, you're already 20% up on any trades that you made in and around over the last couple of weeks. So we're all happy with regards to the pricing of this thing. That would be a target. Who cares if it doesn't ever get there? You're up 20% already. Please put your complaints on the back of the postcard to the British Ombudsman. In terms of looking at this, though, we do have to remember that because I don't have this drawn in quite yet, that of course that this could always be the case for us, and we could have a wedge just as we had in the background in the past. Therefore, 20% crying to your cornflakes if it goes against you. Looking here as well against Ethereum, then we have this ascending triangle on the go, which has had various shapes within it, yada yada. Came outside, tested the zone, didn't actually manage to do anything, back into this zone. If we do drop down, then want to see 28.50 be protected by the prices. Moving up the way, then we've got targets that come in here. I think reasonable. It would be unreasonable really to look towards that golden pocket in terms of saying we're definitely going to get it, although it's on the cards as you can see there. Instead, looking towards the 50% and there would be reasonable in it around about say 35. If we were to do that, which is huge in terms of profit. There, as you can see, 15%. So looking over here then towards the Bitcoin Tezos pairing, we talked about numerous things you could be doing here with this one. We need to see the prices moving back up above the 236 where you have this double top feature before we fell down here with more downside price action. And the way that we want to see that happen is with, of course, some positive price action here with regards to the dollar pairing. We could have the Ichimoku cloud on here. If we did, it would look like it'd have lots of cloudiness here, and the thinnest part of the cloud at the minute comes in around about this zone. If we were to go up through it, I removed the Ichimoku cloud at the start of this video, but that's kind of what you'd be hoping for in terms of a slow and nice gradual move outside of this downward sloping pitchfork here towards the upside. For people who are curious, what type of pitchfork is this? It is a inside pitchfork. I'm not in any way tempted to turn it around to looking like this quite yet. For instance, with a shift, never mind the original, or indeed a modified shift, until such times as we have gone past that zone, obviously. But at that point, I will be taking it down to here. As you can see, the inside pitchfork doesn't change at all when I incorporate its new low. Little lesson for people here, right, as we're tuning out in terms of how pitchforks work. So you have that there. Then if I move this to shift, then you have that there as well. So you can see how this is all working, how that strings together. Little lessons always help. They're always more along the way. Looking at this and saying, will we get more lows here in Ethereum, Tezos, Perrin? Because we have come down lower than our previous low, but it's very much bullishly divergent. If we see a turnaround, it's premature to say so just quite yet. If we don't, we're looking down towards 45. If we do, we push out to the top, we're looking towards 56. Of course, that's a decent move up from where we are now, 57 being nearly 10% up. But if we were to get a measured move off of it in any of this sort of stuff, we could be looking as high as 70. That would be interesting. There's plenty of trading to be done in the meantime. Of course, when we look down towards the low end of these things, we see the volatility popping in and out and whatever with everything that we've talked about so far. Negative stuff, chop happening there. We can see this wick coming in here as we look to put in a equal low. As we look to put in an equal low versus where we just were in terms of the 3-hour time frame, and this is crossed over negatively as the stochastics point down the way, and we come back and test various different areas. In terms of the 24-hour time frame, very much oversold in terms of some of these alts with their major coin pairings, oversold versus Ethereum and Bitcoin. Whereas when we look towards the dollar coin pairings, we can see that we've not gone into that oversold area quite yet. With regards to the link story, we see an upward wedge here in the stochastics, whereas versus Bitcoin, we're back here at the neutral line, and with Ethereum versus US dollars going up towards the top side versus Bitcoin down here at these oversold lines, and that is the industry perspective going inside out, all the way up and down, left and right, covered 3 or 4 times. Tuning back in here, thanks for a great video, says TradeSpotting. I really appreciate it. I'm going to say cheerio now as well. Thanks to everybody who tuned in and watched it. It's been good crack. I really enjoyed it. I'll catch you in the next one. That'll be it for today's videos, I imagine. Been at this, what, 2 hours, 47 minutes. That's surely going to do it for today. See you next time. Thanks so much. Like, subscribe, all that stuff. There's a link, by the way, to a Discord channel if you want to join that in the description. And there will be more. I should have put tags. I mean, I probably don't even have the correct tags. Look at this for a video, by the way. My tags. What are my tags for my live video? I'm not very good. Rocky Outcrop, cryptocurrency. Really should have had some big ones in here, shouldn't I? Bitcoin. That would have been smart, right? Bitcoin, Tezos, Ethereum, Chainlink. Would have been smart to have done this before starting the stream. Probably. BTC, USD, ETH, USD, BTC, ETH, BTC, Link USD, Link ETH, Link BTC, XTZ, ETH, XTZ, BTC. Oh, I already done it. Whatever. That's the sort of thing that I should have had in here. But I tell you what, I would really appreciate it if anybody who still watches along then wants to share the channel and tell their friends about what we get up to here on a daily basis. As you can tell, sort of YouTube fame and everything else isn't necessarily my priority in life. Instead, it's kind of, you know, the community that we have here, in which case today's video has been 100% successful, blowing it out of the water for me in terms of what my metrics would be in terms of looking for stuff. I just have to look down this box here and see the chat that we've had from people to know that, and to know in the Discord that everybody knew that we were talking about things and had the chance to join in. That's fantastic. That's my community satisfied. I'm satisfied. But of course, if you want to help the channel to grow and to introduce it to more people so more people get these benefits, I would appreciate it. And of course, I'll see. In fact, I think everybody else would appreciate it as well. So I'll catch you next time. I'll say cheerio.